On emerging role of microfinance in changing financial landscape. I'm requesting everyone to kindly come inside the hall and join us for the conclave. Good morning, everyone. A warm welcome to all for joining us for the conclave on emerging role of microfinance in the changing financial landscape. Requesting all to take their seats. We all know for last few months, the landscape in microfinance has changed drastically. There are few bills and state ordinance has come. Uh, so we wanted to discuss the changing landscape and the role of microfinance. For the inaugural session, I like to invite our Executive Director and CEO, Mr. Gigi Mammon, on the dais. I would also like to invite Mr. Vivekanand Salimat, Chairman of IDA Financials, and Treasurer of Sa-Dhan. Now I'm inviting Ms. Rupali Kalita, Board Member of Sa-Dhan, on the dais. Please welcome Mr. Mukul Jaiswal, our co-chair. Now I'm handing over the session to Mr. Gigi Mammon.
Thank you, Sri. Good morning to all. A warm welcome to everyone to this beautiful city of Bengaluru. For many of us who are coming from the north, it must be a great relief and I would say kind of a come to a different world altogether with such a beautiful weather around. So I hope today and tomorrow we are having these meetings here will be a wonderful experience for every one of us. So first of all, let me welcome all the members who have come here, all the participants who have joined us for this workshop on emerging role of microfinance in the changing financial landscape. My special welcome to the board members of Sa-Dhan. We have our co-chair Mugulji, we have our treasurer Salimat Saab, Madam Rupali from Assam. She is the only women board member at the moment. We have our board member Ajayji is here and Ganesh Modak is also there. So I welcome all the board members. I welcome all the senior members from different institutions, different MFIs and SFBs who have joined us for this meeting, and we would be hearing from some of them during the next two panel discussion. We know that the financial landscape in the country has changed altogether in the last few years. Especially in the last 10 years, if you see, the things have changed a lot. So is the case with the microfinance also. Microfinance, what we saw during the 2000s or 2010, 2012 and all, and today's what we are seeing is totally different. There is a huge change as far as microfinance landscape is concerned. In fact, there are several things. I was just going through what are the changes which has happened. If you see, because basically it's a poverty-oriented program, if you say, because we were targeting the poorest of the poor people, giving them financial support, and that is the way the microfinance emerged and was born. Today, the poverty itself has come down. It's a good thing. I'm saying it's a positive thing. The other day, there was a report saying that in the last 10 years, the poverty has come down from 25% to 5%, 5.6% or so. So that itself has changed the whole, I would say, the attitude of the people to the microfinance. If you see the staff, the present staff are different from what we used to have in the maybe 10 years back or 15 years back. The new generation who are part of our microfinance system may not be the same type of people who can continue in the same institution for a long time, may not have that kind of a attitude of working any number of hours. They have more aspirational in their nature. They also look for better. It's a good thing. I'm not saying it's a bad thing. They also look for a better quality of life. Some more, the work-life balance for them. So the staff itself has changed. So that's the reason we find a lot of attritions happening. People moving from microfinance, one institution to another institution, not for the money. We did a HR study, and which was also revealed to many of you, that many of the staff have moved out not because of the money. They have moved out because either the workload is more or the work quality is different. So they are looking for something different. So people move from one institution to another institution. People altogether move out of the microfinance sector. So things have changed as far as the staff is concerned. Technology has taken up in a larger way. Technology has come in a very large way. Fintechs are becoming a major player as far as the microfinance also. So that way there is a huge change in the microfinance landscape. If you see, the government has come out with so many programs, so many schemes, like Mudra. It's basically funding the unfunded people. NRLM for SHG women, which is mostly, many of them are common to the microfinance institutions also. There are schemes like PMAY, Lakpati Didi. All these schemes have made credit more available to the people through these programs. Social media is playing a major role in today. You find any small things happening anywhere, it gets highlighted, it gets circulated in such a fast manner. People are becoming more and more aware about what is happening and what is not happening. So that way, if you see, the whole scenario, whole landscape has changed in the financial world and especially in the microfinance world. In such a scenario, how do the microfinance should look like? That is a kind of a question probably we should be discussing today. In fact, we have two panels. The first panel talks about the current status and the way forward. Basically, the points which I have mentioned, these are some of the things which we can definitely debate on, discuss on, and we see how best we can take the sector forward. Because we know that sector is, in the last 1.5 years, has not been doing very well, in the sense it is not the way it used to be the earlier days. There are several reasons for that. I am not going into that. Some of the things which I have mentioned just before are also reasons for the reasons why the microfinance sector may not be doing well. So in such a scenario, what should be our role? What should be our focus? How do we go forward? Probably this we can discuss today. Second part of the panel discussion is basic on the customer grievance redressal mechanism. In customer grievance redressal, we know the customer is the main focus, should be the main focus for all our business. Customer is the king. Gone are the days when people will be happy with whatever you give. Now people are also become more choosy and aspirational. So we have to tackle the customers in much more better manner. Customer has a lot of grievances. They have their own complaints. So addressing them is an important thing. So the customer grievance redressal mechanism is an important thing. That is the reason we thought we should be focusing more on that. In fact, originally this workshop was planned as a workshop on customer grievance redressal mechanism. Deepak is here. Hello? Not at come. In fact, we have developed a manual which will be released today on customer grievance redressal mechanism with the help of M2I. Mr. Deepak Alok is also to join us here. So that manual, I'm sure it is going to be helpful to all of us in taking forward the customer grievance redressal mechanism better. In fact, I should really appreciate M2I. They did a good research. They looked at various recommendations of different world organizations and brought all the recommendations together, and they have taken the best what is relevant to us and relevant to the industry, and they have made a small manual which can be made use of, so that will be released here. So basically, we would be discussing more on the customer grievance redressal mechanism and how do we take it forward. For your information, Sa-Dhan has also is going to launch a toll-free number for the customers, which can be used by any of the customer. So tomorrow we are having the formal launch, but today I'm sure we'll have a demo of that. How does it work? So that will be shown here. So with these words, I'll not take more time. So today's discussions are focused on two things. One, about the landscape of microfinance and how does it look and how do we take it forward. That is number one. Number two is about how do we address customer grievances in a much better way so that people are also satisfied with the kind of services we are extending. Even RBI is very keen about it. RBI is also keenly looking at these aspects. And unlike the earlier days, RBI is now becoming more minutely monitoring things. So we have to take care of the regulators' concern also. So with this, I once again welcome each one of you for this half-a-day workshop here. And I hope we will be having a good discussions, and at the end of the day, we should be able to carry forward, take forward some of the learnings from here and make things work better. So thank you so much, and once again welcome everyone for this workshop. Thank you.
Thank you, sir. Now I request Ms. Rupali Kalita to share a few words.
Yeah. Good morning and welcome to everybody. It's really an impromptu sort of a thing that they asked me to come to Dayas and speak something. While having breakfast also, I did not know that this is happening. Anyway, we all are aware that the scenario for microfinance has changed totally. That's what I was talking to Mukul just before, like a few minutes back, that earlier it was a production-oriented sort of a livelihood generation activity. Every microfinance sort of borrower was taking up, and they would come to you for a loan for that. That was the original microfinance when we used to do it in say 2008 to 2015-16, or say 2003-4 to 2015-16. That has changed totally now. Now they attend the meetings just for collecting money from one organization and from the another, and it's happening like that. The production has been kept aside. Nobody takes, at least in Assam I had seen it, that no one has any livelihood generation activity these days. Earlier they used to have some activity in the family, but these days they have forgotten everything. They keep on collecting, and this meeting has become an avenue to collect money, like from one organization today, from another organization tomorrow, so that they are just borrowing from everywhere without doing anything and repaying from, like, maybe these borrowings. That's what has ultimately sort of vitiated the culture to an extent that at least in Assam we have seen that it has gone to the level of non-repayment altogether. So what can we do in that particular scenario? Whether the mindset can be, whether those people can be motivated back to take up some activities, because the government's doling out the benefits every month some 1200 rupees to 700 rupees to 2000 rupees to every beneficiary's account is also not helping at all. People have stopped taking up activities totally. So whether we can discuss and arrive at some solutions, that should be the sort of our major focus in these discussions, that whether microfinance can be redesigned, revamped, and remodeled into as a solution to this sort of changing scenario. That's what was my understanding. And I came just to understand what is happening in this side of the country. Because in Assam, in Northeast, it is really has sort of, we are not seeing any future for microfinance as of now there. That's what is happening as of practically. So anyway, let us go ahead with the discussions and let us learn from each other. Thank you.
Thank you, ma'am. Now we'll move to our first panel discussion on microfinance current status and way forward. I'll request you to give us 5 minutes to change the settings in the dais. So I'll introduce the speakers of the first panel. Our moderator is Mr. Harish Raghu, who was the former, yes. Please, I'm requesting sir to please come on the dais. In our speakers, we have K.S. Raman, ED of Jana Small Finance Bank, requesting sir to be on the dais. Then Mr. Nanaiya, Independent Director of IFL Samastha and also an esteemed member of our SRO committee. I'm also requesting Mr. L.V. Ellen Murthy, CEO of Dwara KGFS, be on the dais. And last but not the least, we have Mr. Mukul Jaiswal, MD of Cash for Microcredit, for the panel discussion. I'll just give a small introduction to all our panel members. Mr. Raghu was working with the Swagra Microfinance before, and now he is working as an independent expert in the field of microfinance. Mr. K.S. Raman, as I already shared, he is the Executive Director of Jana Small Finance Bank. Mr. Nanaya Kalinga is an Independent Director of IFL Samastha Finance. Mr. L.V. Ellen Murthy is CEO of Dwara KGFS. And also, Nanaya sir is also on our SRO committee. He is one of the esteemed member of our SRO committee. And we have Mr. Mukul Jaiswal, who is the Managing Director of Cash for Microcredit. Now I am handing over the panel discussion to our moderator, Mr. Harish Raghu.
Thank you, Shri. Good morning, everybody. Welcome to Bengaluru, whoever came from little more distances by flight or by road, or by rail rather. And thank you, Gigi Meman sir and team Sa-Dhan for setting up the a wonderful tone for the meeting, and also efforts for organizing this meeting. And also thank you for making my job much easier by sitting among the most and one of the most respected brains and also the personalities in this sector. I had been associated with microfinance from 2005 as a banker, representing as an investment company, setting up a microfinance company, leading as a leadership HR head as a more than 10,000 employees organization in 2009-10 itself. Then reviving a company after the crisis, handling crisis, and of course setting up my own company. But all these microfinance years for last 2 decades, in the advent of India, we had name for every crisis. Starting from Krishna district crisis, you call Mysore crisis, Kolar crisis, right? A demonetization crisis, then Assam crisis, the COVID crisis, and also Karza Mukti Yojana crisis. So every crisis had a name. Unfortunately, for the last 1 year, we have a crisis, but we don't have a name. What, Nane, sir? Yeah, and every time we group or regroup together to understand what's happening and what is the way forward, more or less 90% the cause and effect are the same. What happened on the ground, what's happening on the ground, what's happening on the external environment, and what actions to be taken are remain same. When I still remember in 2006 going to Vijayawada and meeting the then district collector to understand the problem of Krishna district, and we all know the Harvard case study of who killed Bhavani, Manjula and all. But fortunately or unfortunately, we are discussing every problem with the increased AUM across the country. And when AP crisis happened, I was handling from the epicenter of Hyderabad. At that time, we were at 27,000 crores roughly across country, but today we are talking about 4 lakh crores with 7.5 crore families at the stake. See, the point we all know, most of us know what exactly is happening on the ground. It's not that we are coloring the problem. Yes, post-COVID, the 2022 March 22nd, when the unified guidelines released from RBI, the most of the players came in. It's just not NBFC, MFIs or NGOs mentioned here. The co-lending mechanism have come up. The BCs have moved from, I was also owning a BC previously from 2014 itself. And of course, the banks have come up, the SFBs have come up, and the regular NBFCs who are not also MFI registered. And in this scenario, the same customer has been approached. There is a superfluous funds available for the customers in the rural or urban in a microfinance scenario. We all know today where we stand. Unfortunately, all the previous crises have been able to curtail by the industry experts and industry unified bodies like Sa-Dhan and as a SRO, working with various stakeholders, external and internal, setting up some rules internally, and we could able to thrive and we could able to control the crisis. Unfortunately, all these efforts are in vain, at least for a year now. Hopefully, some sunrise ahead of us. We hope so. So, setting up the tone, we have 2 aspects of the discussion now. One is, of course, what exactly the current scenario, and we'll also discuss the way forward from the experts here. Let me start with Mukul Jaiswal, whom I know from my ICICI days in 2005-6 days. The very understanding of microfinance from those days is the social aspect of microfinance, and also the relationship model lending, in the sense, even our loan officers, as Gigi Memon sir was saying, the change of human resource attitude or behavior. That we had microfinance has always been a relationship model where organizations have built bridges with the customer in the group mechanism to understand their livelihood, understand their cash flows and everything. And Mukulji, you can also add your own points on the current scenario. I will come back and we all will discuss maybe after say 20 minutes of time about the way forward. But right now, let us throw some light on the current scenario from your experiences. Mukul.
Thank you, Raghuji, for reminding us how sector has moved on over last 2 or more decades and faced all the crises and the resilience which our clients and all of us or many of us have shown that we have survived all the crises, and I'm hopeful that we will survive this too. Okay, though this is taking a bit longer than what we used to face, okay, in earlier phases. You have already thrown light on many factors which have led to this crisis, and all of us are well aware. I would say that my knowledge about microfinance is affected by the developments which affects our organization where we operate. So my understanding, my knowledge about microfinance is limited to what has been happening in, not across India. I have heard about them, okay, and I have information about them. But my experience has been mainly from the states where we as a we in Kashpur operate, which are northern part of India, and primarily UP, okay, and Bihar, which came into limelight after RBI governor mentioned these two states, if I remember correctly, in his speech last financial year. So we operate in UP, and that too, eastern part of the UP. So not western part of the UP, or Bundelkhand part of the UP. Or we operate in Chhattisgarh, Bundelkhand part of MP. We operate in few districts in Odisha and tribal districts in Jharkhand. And the current scenario is really scary, I would say. And all of us know that this has been led by the availability of or accessibility to all these women to easy money. We all know that every other day there are MFI field officers knocking on their door. Okay. This has been further deteriorated by multiplicity of KYC documents, all of us know. So really, the real assessment of over-indebtedness has become very challenging. And availability of forced KYC documents have further deteriorated the problem. We all know about this. I don't think none of us sitting in this room is not aware about all these problems which we have been facing. And since after this unified or the new regulatory regime came in 2022, it gave opportunity to all kinds of financial institutions to enter into microfinance, even those who had not already entered, okay, to test the water. Okay. Now they are testing the real water. Okay. The difference between microfinance, yes sir, you are saying. So really, on the ground, there is not much difference between retail finance and microfinance. I find it little weird that we are still talking about microfinance. What used to be microfinance, if you remember, first report from Malegam committee, which mentioned about, I think, 60,000 for rural annual household income of 60,000. Okay, though it came in 2011. Okay, so 2010 crisis took place, 60,000. Now we are talking about maybe 3 lakh has been allowed. But again, annual household income assessment, all of us have not been able to come up with the method, okay, which can give us at least 80% or 75% satisfaction that the computation of annual household income is nearly correct. Will it ever be there? I'm not sure. Maybe in urban setup, semi-urban setup, it is possible. But we know that 80% of India lives in rural areas. Okay. So, and this time crisis has affected every nook and corner. All the districts, I would say, lesser or more. So, what Rupali touched upon, and we had a discussion, just I think for a couple of minutes only, but we have to focus on whether the money which is being given by us as a loan and which has high, I would not say high, in some of the cases very high interest rates. Cost of those funds, and we shouldn't talk about interest rates, we should talk about overall cost of funding. So what is their cost of fund? If it is running in the range of 24%, 25%, or somewhere, let's say from 18%, it may reach up to 28%, okay, we have to include all the costs, then how are these borrowers going to survive, and how our loans are going to be successfully repaid on time if their income are not increasing. And this is, we all of us know. So it is very much important that we our loans should still be given, okay, with the objective of helping clients to acquire productive assets, okay, set up new livelihood activities or micro enterprises, or convert their livelihood activities into micro enterprises, or expand their existing micro enterprises, okay, from one micro enterprise to a micro or multiple micro enterprises for family members of our clients.
Yeah,
Okay.
yeah, Mukul bhai, we'll touch upon that on the way forward. But wonderful insights that how the experiences on the ground are changing, the availability of money, interest rates. I think these are all key factors. I mean, it's just not limited to north or south. I think we are the Ek Bharat, and the problem also is similar across the country now.
I would like to add, Raghu, actually, and this comes from my heart. I don't know, many of us may not agree with my thought, but I had been thinking, have we corrupted thought process of our clients with making access to easy money? I was commenting, perhaps we have corrupted their thought process. The whole credit culture which was built carefully over the years, okay, has shattered. And the mindset is corruptible, okay. We know that money and power corrupts, and absolute power corrupts absolutely. So has easy money corrupted their thought process? That's the question we have to try to answer.
It's a very tough question, rather. Now, in 2010, when AP crisis happened, at that time, we didn't have much of a KYC process or a credit bureau by that time. But there was CIBIL available from the regular banking activities, but not for the microfinance customers. I still remember Sa-Dhan at that point of time spearheading a project with Alpha Level, one company name. Now it is renamed as, one more company. And setting up, how do you, share the customer data from each organization? How, the complex names of, Indian women are being moved to English pronunciation, the spellings. How do you, overlap? How do you look at the overlap conditions and algorithms build up and all in 2010 to the till date? The technology advancement is immense, and use of. Nanaya sir, I'm coming to you now. In spite of the credit bureau built up, in spite of say the robust data being available, the organizations are not able to use that, or able to take proper credit decisions. In the credit assessment parameters, have we not able to understand the technology part, in spite of many companies using very latest technologies and spending a lot of money on technology and a lot of vendors? And how do you look at this current crisis in terms of the technology perspective?
Thank you. Good morning. I think, the current crisis, before I get into specifics, I think it's a bit of a self-inflicted wound by the industry, right? Industry went through, demon, industry went through COVID crisis. If you look at the data, post the COVID, industry grew by about 24 point some percentage, close to 25%. So that's the growth rate. When such growth rate happens, what reminds me is the saying which says something which is good is too good to be true. So I think that is what is manifesting now in terms of how good or bad the growth rate has been. And follow through is, the industry is down by about 13.9% in the subsequent financial year. 4.3 lakh crores to 3.81 crores is the AUM of the industry. So that's the kind of drop in numbers. And if you look at PAR 180, industry is running at about 14.5 to 15% PAR 180, which is almost, all of you are practitioners know that it is most to be written off. So that's the cost of running business, right? So given all that, well, I'll come back to the data point of it, but I think the two or three things stands out very clearly during this period, right? The learnings that I see from is one, during the good times, I think the policies have to be a lot more stricter. whether it is credit appraisal or credit approval policies have to be a lot more stricter during good times. Some of you may not agree to this viewpoint, especially practitioners saying that in the difficult times, possibly it has to be a little bit more liberal. Connecting to what Mukulji mentioned, in the difficult times, if you're able to segregate between consumption loan and income generation loan, right? So income generation loan, if can be encouraged, it'll keep the cash flow running. I think, stopping the lending during the difficult times, you're stopping the cash flow for the borrowers who typically mostly use it for their working capital requirements for running the businesses. So you kind of, stopping that flow, which affects the repayment capability as well. So if, as an industry, if you're able to segregate between, income generation versus non-income generation loans and continue to support the income generation loan during the difficult period, I think the recovery could be a little bit faster and quicker. That's the point number one from a learning standpoint. So be tough during good times, be a little liberal during difficult times, but selectively, because data is available to a granular level. I think we can be selective in a credit approval process. The point number two is, I think all of you, this is nothing new about it. The attrition rate in the industry is about 60%. The best case is 45%, worst case is 60%, which means two things, right? Knowledge walking out of your door consistently, 50% of the knowledge walking out of your door, point number one. Point number two, the customer relationship is being broken on a consistent basis. The customer is seeing a new face all the time. So, which is a serious challenge. And, getting somebody on board, training them and getting them on the field, rebuild the customer relationship and, somebody changes. So, I think to me, these two are really large issues that are facing the industry at this point in time. We'll talk a little bit about, what can be done to address some of these issues from a technology and a data standpoint. Just one last point on the data question that you asked. I think the recent guideline, not so recent, but a couple of quarters, guidelines from RBI from a data reporting standpoint, while NBFCs have been reporting, majority of the NBFCs have been reporting data to the Bureau on a daily basis. Large banks have been reporting on a monthly basis. So moving everybody to 15-day basis reporting, 7-day for bureaus to update the data, I think helps the currentness of the data, right? We should be seeing, in my last role in Equifax, I remember recalling meeting Mukulji. Mukulji's point was that, how do I know the person has either taken a loan the last 15 days or last 20 days or not? Because the data submission, data refresh, all takes time. So the lag at that point in time, at least my estimation was about 45 days of lag, right? Between somebody taking a loan, getting reported and getting data updated. And when you pull a report, you see it so late. So that has come down now. It is 15 plus 7. You're technically looking at 21 days of refresh. So I think that's a very positive sign. And so from a data standpoint. So whether the industry looked at the data very effectively or were they liberal during this period because there was a lot of appetite post-COVID for loans. So did they overlook or they were liberal? I think everybody, all practitioners know what they did about the credit approval process. And guardrails which are coming now are, post the crisis, policing around is not necessarily a great thing. I think all the practitioners have ownership for their money that they're lending. I think they'll have to practice a lot of prudence in their process as opposed to waiting for somebody to say, okay, do only this, do the following, right? So, but anyway, it works as a good optics from a guardrail standpoint, but not necessarily a good proactive practice. It is a very reactive practice. So I'll stop at this. This industry is so much we can talk. I'll let you pass on to the next panelist.
Thanks, Ganesh. Yes, there is a advancement of technology for last, say, 10, 15 years in terms of customer data, the credit appraisal mechanism, the KYC mechanism, everything, the technology is available. In spite of that, we are running into a problem continuously because there are some more factors, as you mentioned. Today, I don't know if the Alois Fernandez are here or not. Last time when I met Alois sir, Padma Shri Alois sir, he said today's problem is because of the speed and greed of microfinance companies. So, I mean, some of us may agree or not. The problem, yes, is continuous for last 10, 15 months is something undigestible for the thing. Second, Murthy sir, I'm coming to you. Yes, as Nanaya sir said, because of the attrition, the relationship bridges are broken between the organization and the company, because previously we used to get, I still remember visiting the SSGs to JLGs, and today it has become a one-member group, right? So it's a great invention in our own standards. And the group mechanism, group dynamics on the ground have been deteriorated post-COVID. I mean, we blame COVID, but there are many other internal factors also in terms of our growth, which has deteriorated the group discipline. The multiple ways of the same family being targeted by various organizations in various loans. Variously colored, differently colored loans are available to the same customer, even though you don't call them as microfinance, of course. So probably these are all the few things. And of course, our own fraternity is, saying that it's just not over-indebtedness or multiple loans, the lending to the delinquent customers, evergreening, and all these things we always hear, and we always contemplate whether to support or not. So I just want you to throw your views along with some of the points mentioned by me.
Thanks, Harish. Thank you all for inviting me. You started as to what is the name of this crisis that we should have. I was just thinking, we just had Operation Sindoor. I think right now we are in Operation Tandoor. And we need to get out of that. The unfortunate thing is that I don't see any major difference between 2010 when Malegaon Committee report came to what we are right now. Because I think the mistake that we are doing is that we have a cancer and we are treating it for a headache. The diagnosis is that we are right now having cancer and the medication that we are taking is for headache, because 2010 itself Malegaon Committee said you can't be more than third lender. And now in guardrails we are talking about being second lender, third lender. Where was the industry in 2010 and where are we today? I think the problem is that ticket size increase, percentage of growth in terms of gross loan portfolio to percentage of growth in terms of number of members. If we correlate that, I think the problem was multiple lending was happening at that point of time also, and multiple lending is happening at this point of time. I think the mistake that we have done, I might be, and I carry a contrarian view to the industry. As a practitioner, I feel we took a knee-jerk reaction in September by putting a guardrail saying that stop lending. Let's be very clear that post deregulation of this sector, same cattle buying, which were where the customer had assumingly 3 lenders, cycle 1, maximum 1.5 lakhs, assumingly if the average ticket size was 50,000 rupees per institution. If 3 institutions were lending to buy a cattle, it was 1.5 lakhs. And today, post deregulation, the customer has a visibility of almost 1.5 lakhs per institution, which is roughly about 4.5 lakhs. Has the cost of the cattle gone up? It continues to be almost the same with inflationary increase. What we did is that we stopped lending. Where is the cash flow to that household which has got impacted? We talk about inclusive impact. I think financial inclusion is done and dusted, because exclusion has also happened. Let's be very clear. Inclusion, we were talking in the last 12 to 18 months, we have done exclusion by saying written off customer should not be given a loan, a delinquent customer should not be given a loan. Then how are we going to get back the money that we have lent? We are talking about industry is moving towards the right direction. Last 2-3 months, things are looking brighter. Is it looking brighter because customer behavior has changed, or is it looking brighter because balance sheets have been cleaned? Let's put a hand on our heart and say that industry is improving because customer has started repaying, or is it purely because to manage our GNPA and NNPA, we have taken losses, we have done write-offs, and again we are wanting to grow. Attrition. The biggest problem is attrition, that attrition was happening earlier also. Attrition is happening now also. But the problem is the minute the new guy comes into the system, there's a pressure on him saying that guy, you have to start producing. Now where does he go? He goes and looks at all the customers that he rejected, his earlier institution rejected, is what gets in, and that is where anti-selection happens. In insurance, you take a declaration of good health. In microfinance, we basically just take a credit bureau report. Inclusive finance has become a sustainable finance today, and we are talking about green finance. The next buzzword is green finance, that all DFIs want green. Here we are in red. Operation Tandoor, we are burning, and we are talking about green. So, attrition, I think management of attrition and pressure on the new guy is one thing that we need to do. You spoke about group sizes coming down. My question is, why can't we question the norm? What happened 25 years back when Professor Yunus started this model with 5-member group, but that time microfinance ticket size were 2,000 to 5,000. Today the ticket sizes are almost to the tune of 1 lakh. So should we call microfinance or should we call small finance? And what's the harm in terms of why should I have 5-member group? Where is the group affinity? If group affinity was there, probably this kind of delinquency wouldn't have been there. I think the very fact that it broke, the affinity broke, customers stopped giving. I wanted to grow. And to the point Mr. Mukul said that credit culture has changed because during demon, none of us wrote off so much. Because at that time, the credit culture was perfect that if a customer is delinquent, I will not interact with the customer. But in post-COVID, what happened? I don't care if the customer is delinquent with some other institution or not. As long as the customer is good with me, I am willing to do. It reminds me of a statement that Mr. Ramaranga Raju, ex-CEO of Satyam, said, I am sitting on a tiger, not knowing whether to get down or should I continue. And I think we are in that situation. And with the new microfinance regulation of 60-40 qualifying, non-qualifying, I personally feel that next 2 years down the line, there is a new crisis that is going to get built because the return of all the write-offs and the losses that all institutions have taken would like to cover up by increasing ticket sizes. Customer will continue to remain the same. Customer will continue to remain the same. So I think it is not a problem of external, it is a problem of internal that we need to know what kind of growth, what kind of product, what kind of markets should I be working on, and what is it that I can eat that I can digest. I would leave here. Probably, I'm sorry that I have a different view, but I think the reality is this.
Thanks, Murthy sir, for the candid remarks. And yeah, most of us agree that your points are same. We discussed 10 years ago or 15 years ago, and we are also discussing the same problems here. Now I'll reach out to Raman sir as a banker. He's representing an SFB. You know, once the SFBs, the larger MFIs have got license of SFB, they moved. They were supposed to get access to the low cost of funds compared to the NBFCs, so that the customers being served from the SFBs will have an advantage of interest. The recently Deputy Governor also mentioned about this point. What is a banker's view on this current crisis? Just not as a direct lender, but also today, if you look at the NBFC's source of debt, mostly around 50-55% of the debt coming from the banks. When most of the lenders, bankers are also in a very strict rules now to lend to in terms of your delinquency levels, or in terms of your capital adequacy, or in terms of your rating. All these factors now, getting a debt also becoming a tough now. In this scenario, obviously the book is coming down, just not for this reason, of course. But I would like to share your views, of course, and also I would like to thank you for making a presentation. I request you to present to the audience also. Then we'll start the second part of the discussion. Raman.
Thank you, Harish. Am I audible? Is it okay now? Yeah. Thank you very much. So, a couple of points. I think first is from a perspective of how did banking finance actually get affected. I think the first point was RBI started getting nervous, and so they increased the risk weights for lending to NBFCs. And in a perverse fashion, it was actually intended to discriminate against better rated entities. So BBB plus, in a standardized models, BBB plus gets a 100% risk weight. Anything above the risk weight start coming off. So A minus or the A family typically gets 50%. But RBI had imposed a penalty of another 25%. So 50 became 75. And double A family typically is 30%. So 30 became 55, and so on and so forth. So in addition to getting nervous about overheating, over leverage of this sector, RBI actually put in some clear metrics to cool down the lending. And earlier, prior to that, they had started making a lot of noises about banks are lending too aggressively to NBFCs. So now all of that has resulted in a pretty significant reduction. I think last financial year, bank financing or overall borrowings in the balance sheet came down by 35% for NBFCs. So that's something which has had the impact that at least RBI looked at it from a systemic standpoint. Now, of late, they've removed those criteria. So the 25% additional RWA has been rolled back. And to be honest, I'm also puzzled about how it is going to get implemented in practice. There have been some news reports about RBI being the lender of last resort to NBFC. So, I mean, I really don't know how that's going to pan out in practice. So these are two pieces. Now, from a banker's perspective, first as a lender, I have to say, microfinance in particular is not a great sector for banks to lend to at the moment. And I mean, various discussions we've had in boards, and some of it, I think Nanaya talked about NPA levels, 180 plus, going up to 14%. And even the 30 to 180 had gone up to about 6.4%. So all of this there's a lot of nervousness, A, about delinquency, B, about lack of growth, and therefore, what will be the impact on profitability and sustainability of this sector. So these are definitely worries that we've seen across, and I will be a little open and frank about how when we did our NBFC lending strategy, we said let's move towards better quality lenders and reduce our exposure to MFI. So these are definitely practices that, and then we won't be an outlier. All banks would be doing something similar. And therefore, the only other ways that we can probably participate as a banker, SFBs are barred from co-lending, and therefore co-lending is not an opportunity. Then the only other way we can participate is as a through a business correspondent relationship, or through a direct assignment. And direct assignment is also limited to where I mean I can't do a direct assignment if I have a shortfall in my overall PSL requirement. I will need to only do it where, for a sector like agriculture, I have a shortfall. So these are really the avenues that we have in terms of additional opportunities. No, I believe it's not.
So thanks, Raman sir. I think these are all very important views to understand, especially in terms of raising debt and other things. Thanks. I think if there is anything on the current scenario, if you want to add, please add. Otherwise, we'll move to the way forward. Yeah, it's always good to look at the way forward and arrive at some points where the SRO leaders like Sa-Dhan can take a note and put across their board and their members, AGM. And I think next 2-3 days, GG Meman sir has plans to meet and discuss so many people for 2-3 days. It's going to be a very wonderful brainstorming session, I believe, Meman sir. And yes, whenever the problem we had and the similar issues, the government, state government interventions, because on the ground, the customer is not able to discriminate between the registered entity and the not registered entity. That is the biggest problem today. What happened in 2010 also, the most of the local money lenders have given loan cards like MFIs to the same customers in the name of some, the local name. For the customers, it was a confusion. Who is a real microfinance guy? Because initial days, as a banker, when I used to visit MFIs and their field, the customer used to say very simply that they don't remember the company name. They used to say the Monday company, Tuesday company type, because those days are weekly repayment schedules. But today, the times have changed and everything changed. Nanaya sir, I'll start with you on the way forward. Yes, technology, one. Number two, because in absentia of Aadhaar card being taken as a, the primary document for the credit bureau verification because of the Supreme Court ruling, and thereafter some of the organizations are able to use and many of the organizations could not use. This one problem. How do we solve this? Because the voter ID card also creating some problems in terms of the sanctity of the details in the credit bureau. And how do you look way forward? What is your advice? And also how the new AI being implemented in a lot of vendors into the microfinance sector can help reduce the risk and also the improve on the credit assessment mechanism. For your views, please.
Thanks. With regard to the credit bureau part of it, I've been part of it. So while Aadhaar as a reference point for search was there, it was very good. But subsequently, I think we have evolved as a bureaus across the country very effectively to improve the search match criteria. So the search match criteria is extremely well advanced to ensure that there is accuracy in the way the reports are presented back to the lenders. So, which I think is not so much a challenge in my view or in my head at this point in time to say that search matches still continue to be a criteria. I think there will be a small percentage of mismatch which will happen, which is I think sub 1% or maybe 1%. But I don't think that's a major issue. But I think the major issue is the refresh of data, right? The freshness of data is so important for the lenders to know that who was given the loan in the last 15 days, the last 20 days, last 30 days. I think industry moving to daily reporting is the best thing to happen. I think regulator potentially, if they can advise the banks to submit the data on a daily basis from 15-day to daily basis, I think that will be a big step to ensure, because NBFCs are already reporting on a daily basis. And the refresh happening quickly, I think will be a big advantage for the industry from that point of view. Second thing, I think there is a missing data, right? As all of you know, as all of us are aware, the self-help group data is not in the credit bureau. So that's the bottom of the pyramid. The size of self-help groups in the country, which is very, very large. So that data is not coming into the credit bureau. If that data can come into the credit bureau, I think it will strengthen the power of data that bureaus can present back to the lenders. And I personally don't believe that the lenders to self-help groups cannot automate the process, cannot introduce technology to track the balances at the borrower level, So the group level balances are not helping the cause, because not all the borrowers in the group are borrowers at all the point in time. They are borrowers at some point in time. So the balances at the borrower level in the self-help group, I think, is a very critical input for the bureaus and for this sector if you continue to focus on the bottom of the pyramid across the country, right? So that's from a data standpoint. But, on a very positive note, if you look at the sector, microfinance is still about 3% of the retail lending in the country. Retail lending has grown healthy, grown phenomenally over the period in time. Mukulji mentioned I'm a little confused about microfinance retail, which is true, right? There's overlap of about 30% I hear between microfinance customer and a retail borrowing, That is microfinance customers borrowing in retail. From a qualifying asset standpoint, that might be of a great help, so that at least microfinance can continue to hold on to the customers and give them retail loans, right? So that might help in some form. So I think microfinance is still very, very small part of the overall lending industry. Even if you increase the share by 1%, it's a lakh crore additional to the AUM that can be added to the industry. So if you look at the opportunity to, in my head, is phenomenal, because 65% of the Indian population still out of rural part of the country. And if you look at the penetration of technology and the coverage is extremely good, right? There are 400 million internet users in rural part of India at this point in time, right? So the technology penetration, the roads penetration in the country is really, really good. If you look at electricity, all the facilities by various programs by Government of India is really focused on the rural part of the country. So there is improvement in the data that is happening, and there is a lot more data that will come in. So Aadhaar has just opened up the aggregate data. I'm not sure, how much it will benefit, but it's good to look at that data from Aadhaar to see is there a way that, it provides some insights for microfinance industry, because aggregate level data from Aadhaar was not available till recently. And as all of you know, the census is up in 27, and the starting process is household listing. I think that's a big thing for microfinance industry to see, how many households qualify, what type of houses, all of that stuff would be a great level of input. So from a data standpoint, I think industry will be overwhelmed by data over the next 2 to 3 years, and that will be phenomenal for industry to, crunch the data to figure out whom to give a loan, whom not to give a loan, and, give for what purpose also, right? So I think data is really moving. Technology, your question was about AI. I think good thing could be possibly one of the things that industry could look at is even partner with fintechs, right? To the problem that we talked about, high attrition rate, the customer relationship being broken on a constant basis. One could always look at, at retention of employees, but how much. We've all run businesses, we know how it works and how it doesn't work at most part of the time. But I think is there a way technology can help build the customer relationship, can help continue the customer relationship. I think maybe a good thing for even Sa-Dhan to look at a working group, which can look at, the ways and means of reducing attrition and also introducing technology to improve customer relationships. So that, technology is something there to stay and, continue to add. Last 2 points, there are a lot of alternate data that is emerging in the market. So can the industry use alternate data to do better assessment of credit? AI ecosystem is improving extremely well. So is there a way to access some of the AI data as well is a good point. And from an AI standpoint, it's a long subject. AI can certainly solve for a lot of routine issues, so whether it is customer grievance or or issues which are connected to collections. But to get to credit assessment, I think it will take a little bit of time, and it also needs a regulatory support for AI to be used for risk underwriting, right? So unless regulator allows. AI is self-learning models, right? So it keeps learning. And today it has approved a loan for Nanaya. After 5 days, Nanaya's data has changed, so that process will change. On what basis did you give a loan to Nanaya? It will be it's a difficult thing to track from a regulator standpoint. So there are challenges from an underwriting standpoint. So it has to be an industry-wide regulator collaborated effort for AI. But AI can certainly solve a lot of routine issues that industry trying to deal with. So overall, I think opportunity is big. Data is going to be abundant over the next 2 to 3 years, and if technology is obviously evolving extremely well. So if organizations can start to transform right now, and prepare yourself for the next wave of opportunity of making more data and tech-based decisions, and not look at macro segmentations, right? Look at very micro segmentations, because each one is very different. The group is broken. No, I don't want to say group is broken. I think many of the practitioners will be very hurt on that. The group is diluted in some form, so it's the individual's data which is so very important. So can we all assess based on the individual's data, I think becomes important for the industry.
Hello. Hello. So thanks, Nanesh. I think these are all the fundamental technological points we always ponder upon, and good points, of course. And how do we use every organization, and how do we take it forward in terms of because the technology is changing every day. Now I'll come back to Mukulji. The same question you asked, we have corrupted the customer mind, right? We always taken pride in all these years that we introduced microfinance. We have educated our customers financial literacy have been envisaged by the microfinance companies, financial inclusion, the Jan-Dhan Aadhaar mobile, the JAM, the famous dialogue, has been very much used by the microfinance companies. In spite of all that, today we are not able to connect to the customer. In your views, what exactly have to be envisaged by the our staff on the ground so that we can rebridge our relationship with the customers?
I think I would like to say from our experience and our practices in Cashpur. So customer centricity has always been at forefront of everything we have been doing. We have Naniya Sahab just mentioned about 180 plus reaching 14% and then 30 plus up to 180, around another 6%. Casper's delinquency rate, and we haven't written off in last in 24-25, okay? None of the portfolio has been written off. So without pre-write-off, and we have decided that we would not even write off in 25-26. Let whatever delinquent portfolio is there be there in our gross loan portfolio, okay? And it is still at AUM level, our 30 plus, all inclusive, okay, is around 1.5%. So though we are a small company, roughly having a portfolio of around 4,500 crores, okay, but we never believed in growing too much, which was beyond what we could manage. Because the focus had always been providing access to microfinance services. We were never worried, despite the fact that we were pioneer in UP and Bihar. We were never worried when other MFIs started coming into our operation area, because that we took as a success. Why MFIs were not lending when they were lending in South India, they were not lending in North India, in UP and Bihar? So if subsequently they came and started lending in UP and Bihar or North India, we took it as our success. And we started focusing that rather than increasing our outreach, we should try to satisfy the full credit need of our clients. And those who have become habitual multiple borrowers, they have to be dropped out of our program. I would not cannot share with you a percentage, but more than half of our clients, as per our credit bureau record, are still only our borrowers. Okay? When we do their due diligence at the time of their loan application, which we take, and we do the credit bureau check. We run close to 2,500 tuition centers, where more than 1 lakh children are benefiting. All our branches work as e-clinics. We have started a hybrid approach that even health services. So we have taken that our program, which we call it PRP, Poverty Reduction Program, okay, has to be built on 3 foundations. Number 1, microfinance or financial services. Okay, so that we can provide loan capital to these poors. And then what are other problems which are affecting these borrowers while they are struggling to come out of poverty? So we had identified that there are 2 major challenges. And one was health, because that used to deplete whatever saving they might have built, or whatever increased income or increased cash flow was there would get negatively affected. So customer has to be in the center of our grand scheme of things. If they are sustainable, their livelihood is sustainable, we are sustainable. If they have to borrow from others to repay our loans, okay, then I think they cannot sustain for a long period. So that's why we have to focus on trying to ensure that the maximum amount which is being delivered or supplied to them by one of us or by 3, 4, 5 of us. If each of us could ensure that the money gets, okay, invested into productive activities, in livelihood activities, then only we can actually survive and reach to the next level. Future, I think, way forward is really, I find it very positive. Because every such crisis increases our longevity also. Because we try to understand the causes, we try to improve our acts, and the real problem is, again you see, we are talking about 10%, 15%. So really the crux of the problem is, why did we lend to those 15 people out of 100 whom we shouldn't have lent? So the real magic is how to resist the greed of lending to 99 out of 100, okay? Rather, we should get ourselves satisfied that we should be able to be happy, okay? If we could exclude 15 and lend to those real 85 who can actually are credit worthy in real sense. And we are able to manage their household income, measure their household income and cash flows. So, for example, Nanaiya Sahab has already elaborated the kind of advancement and in the data science, in technology has been made, and how can we use going forward, okay? And its use will actually get intensified, okay, at, more and more in coming years. But to add to that, it cannot be only AI ML led model or digital led model in microfinance. Certainly there will be more data points, okay, which will become increasingly available, okay. So, but I think hybrid approach is safer approach in my own way of thinking, where we can actually use the best of the technology as well as best of the approaches which we can adopt by having closer relationship with the clients, okay. So that's why we have to invest, as I think you mentioned or somebody else mentioned about 50% attrition rate or 60% attrition rate. This is going to be, we have to handle that very carefully. Anything about 20, 25% is always a very dangerous thing. So we have to invest in human capital. We have to keep their career in microfinance attractive and competitive compared to other financial services sector. So these are the things I wanted to say, Raghuji. Thank you.
Thanks, Mukul bhai. I think wonderful insights. How do we rebuild our bridges with the customer? It's not that much easy, but of course, with efforts, it's possible. Now I will go back to Raman sir. The way forward also, lot intertwined with the bankers' strategy as well, because NBFC ecosystem is largely dependent on bankers as well, even though the new ways of raising funds like NCDs, European bonds and foreign bonds have been now also there. But dependency on the banks is very high. Now banks also participating directly and of course indirectly also with this microfinance portfolio, even though it's 3% of the whole retail, but 7 crore families is a big number, and we always take pride in that, Raman sir. The second thing, do you look at any regulatory changes if SROs can work with the regulator so that the situation can be handled better and we can pave a better way for the future? Raman sir.
Thank you. Thank you, Harish. So a couple of points. I think the first one is, I'll answer your second question first. So from a regulatory changes, see that there are 2-3 things which we haven't really talked about. Increasing legislative intervention in the whole collection mechanism. I think that's it started in Karnataka, and in fact it started in Assam some time ago. Then in Karnataka a little while ago, and now TN, I mean, as recently as 2 days ago, I think they passed the bill. As recently as 2 days ago, the governor provided assent to the bill in terms of collection practices. I think they've talked about an imprisonment of up to 5 years for people who are seen to be involving in coercive collection practices. I think that's a term that they've used. So I think this is also in some ways going to shape, irrespective of whether it is the organized sector that or the unorganized sector, which is what they are aiming at, as compared to the organized sector, which is RBI regulated entities. Irrespective of that, I think there is going to be continuous pressure in terms of collection mechanisms, and therefore how does it influence individual behavior. And I mean, to me, that is, it's gone, it's probably irrevocable in a manner of speaking, and that's my view. The second thing is, I mean, given what we are seeing, the qualifying assets criteria has come down to 60%. For loans less than 2 lakhs, gold loans, LTV has gone up to 85% from 75% earlier. I think both these together will mean that there's going to be more and more migration towards secured lending. That's number one. Number two is, the 2 lakh criteria is probably here to stay. But what is happening right now is, if you look at the bureau, many of the customers are either already at 2 lakh plus or delinquent or both. And therefore, in the near term, I actually see that lending to unsecured will probably be focused largely on existing customers. And even there, I'm seeing a move towards more and more individual loans rather than group loans. I think these are probably trends that I'm seeing in the near term. And therefore, what happens to some of the institutions, we'll probably see that there will be less reliance on balance sheet. Wherever there is reliance on balance sheet, there will be on secure. But otherwise, there will be probably more of a focus towards BC model. These are probably, and these are my personal thoughts. These are not the thoughts of the institution that I represent. So these are my personal thoughts, which is what I believe is likely to happen in the near term.
Thanks, Raman sir. Now, whenever we discussed all these, the reasons and the way forward for the crisis, is always we look at yes, there are multiple types of lenders available, multiple types of loan available for the same family. Murthy sir, one, is there any need to restructure our product suite for the microfinance? Given that 60-40 is the now new norm from the RBI, whether new innovative products will come into the force, or you see, you already mentioned about it, of course, that giving the micro LAP loan or micro SME, MSME loan to the same customer is going to be one more microfinance loan with a different color. And number two, what are your views in terms of the branch structure? Right now, we are still with a branch model where we have the 5 to 7 branches in a district, and we'll continue to organize a branch at taluk level, a root system. Or you see any changes needed if at all we want to continue with our happy face and we can get a good sleep without any manageable delinquencies, if I could say?
No, I think, see, when RBI did the deregulation, everybody thought that there would be a lot of innovation in terms of products, in terms of distribution, in terms of final delivery to the customer. But unfortunately, what happened, innovation came only in terms of average ticket sizes. But I think this stressful period that we are undergoing, I think, is slowly moving towards, innovation. Because one size fits all will not really work. Of course, I think the larger thing is that we also need to appreciate the fact that customers' aspirations are also changing, household aspirations are changing, and JLG as a product will not fit. Probably JLG is a good entry product into the household, but then you really need to innovate at the household level. When Mukulji said that, we understand the customer. When you assess the household income and expenses, I think that is where innovation begins. That is that the right product? of course, technology, as you said, AI and ML, I think usage of AI and ML is very good, that it reduces some of your costs, but it also increases many of your costs. And in an unsecured loan, the last mile connectivity, which is the loan officer, I think we need to continue to empower him, because the customer looks up to him as the authority which approves the loan, not a technology which approves the loan. And I think if you empower him and you continue to pamper his position in terms of wherever that he is operating, I think things will work. But innovation will definitely happen. Product structuring will change. As I mentioned, why should group be 5? Why can't group be 2 with increased ticket sizes? That you don't need to wait. Renewal, we have certain our own underwriting norms that minimum size of this many has to be there. Why should I lose individual customer also? That you continue to ensure that the customer keeps, growing along with you. 60/40, obviously, good way to grow the book, but my only thing is that we need to be cautious in terms of not lending to the same customer. But while doing that, we need to build internal skill sets, because JLG is a banyan tree. Selling a pre-underwritten product to a cash flow based underwriting or to a secure lending is very, very different. I think we should not commit that mistake. And in my personal experience as an NBFC, I'm not an MFI NBFC, as an NBFC, I'm telling you, it took us 7 years to create an individual enterprise loan book to wherever we are. Same guy cannot do both. Similarly, an unsecured enterprise lending to a secured is also very different. That, when you do an MODT, now we need to decide. So there would be many things that will come. Soft lien would be one product which I'm presuming that everybody would run around to get rid of the MODT product. But how long will it continue? Ability to repossess, ability to ensure that MODT happens, and custody of the documents. Coming to the last point in terms of branch network, I still feel that in the remote rurals or the rural markets that we are operating, and with the gold jewel that you spoke about, the regulatory aspects of keeping the jewel at the same branch, where do you keep, if you're doing a secure product, the documents, custody of those documents, transportation of those documents, logistics of those documents? I think branch will continue. I think branches will grow. Probably the service area of branches will come down is my view. Today most of the institutions look at 50 to 60 kilometers of service area. I think if we really need to ensure a great customer relationship and being a customer centric, I think we shouldn't worry about 50 to 60, rather 20 to 30 is a good number. That way you are taking the care of your loan officer also. His health is as important as the customer's health. We unfortunately don't worry about the health of the loan officer. We take it for granted that I am giving you a salary and a semi-variable pay, get me the loan. Paisa leke aao varna office mat aao. But unfortunately we don't do. So I think these are some of the changes that will happen. I think most of the organizations have realized that earlier carrying capacity of 600 to 650 per loan officer is no good. I think it's decent to have 250 to 300 good non-delinquent carrying capacity. I think we can still continue to make money out of that rather than making money at 650.
Thanks, Murthy sir. I think wonderful points on the way forward. A few things from my side as a HR practitioner. One thing with all the gig workers on demand across and the delivery mechanisms are penetrating into district headquarters, for them the first target is microfinance employees. And one of my colleague in microfinance company, HR colleague, is also heading a HR in one of the delivery companies. He says, my microfinance experience is helping me a lot. So this one part is definitely a challenge for all of us, but however, I also admired by the leaders in microfinance companies at various leadership levels who always been keen to travel and meet their field staff and motivate, sit with them, eat with them, and also make them to feel like your own family. I think these are all some of the factors to mention, because when crises come, when police are booking cases, some of the employees have been arrested, to maintain them, to keep them, with us, it's a big challenge. I think most of our leaders are practicing. Some of these good practices can be benchmarked, Memen sir, and also shared with the industry practice, so that it can be you might have organized already with the HR heads conclave where some of the good practices can be shared. The number two, how do we? Microfinance is here to stay. Even if you want to diversify, we have seen so many diversification ideas. Ideas are great, but implementing, as said by Murthy sir, it's tough, but coloring, say, microfinance loan to the same family and giving is not a great idea, but it's not diversifying fast into other areas where we don't have, where the organization or the employees doesn't have the capability, also a question. But I think microfinance is here to stay. Yes, there's a problem. There are also companies now focusing on the zero bucket. Previously, the zero bucket flows used to be between 2 to 4%. Now it has come down to 1 to 2%. That's what I heard when I spoke to some of the field guys. Probably, God's grace, once it is come back to 99.5 or so, I think whatever happened to the delinquent book, we can deal it with a separate team. I think the first job on our table is how do we stabilize the zero bucket. If at all our energies are able to manage the zero bucket first, and that could be fine. So I think we are on time. Another 2 minutes, if we can take 2 or 3 questions from the audience, if at all any questions.
Yeah, so it was interesting to hear about financial exclusion as a offshoot of the current situation, where we're having rejection rates climbing up to 50-60%. Some people talking of even 75% or higher rejections. So I didn't hear much on that. I mean, some expansion on that, if it's possible in a minute, because that would accentuate, because ultimately, as all of you agree, that this is in the end about, the serving the poor. And perhaps if seen in context with the legislative action, because the excluded are bound to lead to problems at the social level. So some thoughts on that. How do we deal with the excluded ones?
Murthy sir would like to answer.
See, when I say exclusion, see, typically, if you analyze your book, you will find that if you have 95% of your customers as scheduled customers who are paying regularly, 3 are delinquent, there are 2% of customers who pay partially on a monthly basis. I'm just giving an example. 2 can be any number. Now, these customers are, the intent of the customer is good, but the ability of the customer to pay is not good. Monthly, the repayments are coming, but unfortunately, they are sitting in 90 plus. Now, today, all the write-offs, which is where I said that is industry progressing because of not the technical write-offs that we are taking. Every institution has a policy of doing writing off at 180 plus. But if that customer is partially paying, am I actually not excluding that there is a condition which says that you shouldn't be giving a loan to a return-off customer? Point number 1. Point number 2, in my view, every institution has a CSR budget that they are supposed to do. But why can't we basically request the SROs that it is just not your job to regulate, but your job is also to develop the industry, that how do you get back these customers? Now, we all have midlife crisis that we lose jobs when we are in corporate, but there is some corporate which helps us in getting back to, back to the industry. Same way, how do I help these customers that you could probably increase the interest rates a little bit higher to them, or probably provide them extra within your books, because, that is something which you could take. But the thing is that we would need to get them back to the formal credit industry. Otherwise, there is a money lenders who are actually now enjoying that these are the set of customers whom we can go back. If I have answered your question.
Yeah, at the micro level, yes, but my question was more at the macro level, the aggregate level, because, let's see, in last 1 year, I think we have seen shrinkage of the portfolio. So if overlending was the only problem, it should have cured itself by the shrinkage of the portfolio. We are not seeing much sign of that. And on top of that, the problem would remain. Yes, CSR is one answer to addressing those who are getting financially excluded, and how do they correct, the over-indebtedness, etc. But at the macro level, what can be the expectation? What can be the expectation from us as an industry?
I don't know, but just to ask you, you said shrinkage of portfolio is not as much.
No. I'm saying shrinkage has happened. A good shrinkage has happened. So if there was over-indebtedness, it should have corrected itself by now, by, less lending happening. Perhaps to some extent. It's not.
Look, one of the other things that you could think of possibly is, the guardrails are very, very broad-based, right? So if that can be a little bit more specific, as I spoke about income generation versus consumption, right? For income generating loans, if you could continue to finance, even if you are the third or the fourth, then the cash flow continues and they're able to repay. So the broad-based, guardrails possibly needs to be, reworked to be a little bit more specific, a little bit more flexible, so that you're still able to make the proper credit appraisal at the point of, loan officer level to see where is the loan getting used. So if it is getting used for income generation, I think you continue to support the cash flow, and the chances of repayments are really high. And to your point, if you look at the data, I think the current origination quality is good, because I think they are not moving much buckets, right? The older origination is where it's constantly moving up, and it's moving up to 180 DPD at this point in time.
Thanks. If any further things, sir, you can discuss over coffee, sir. Any more questions?
But I have something to ask.
Saibal, yeah.
To you. My question is to you. Ananay, you have been lead to this, your Credit Information Bureau. It is not only SHG. The data of not-for-profit segment is also not being uploaded and they cannot access it. We have written to Reserve Bank of India. They have told us to work with the technology companies. Good thing. But the thing is that, one, their data is not getting uploaded. Microfinance is a community thing. It is unlike bank, it is individual psychology, it is community psychology. If somebody is not repaying to your not-for-profit, there is every possibility that they won't be paying to NBFCs also. So this will happen. Second thing, what we are also seeing that it's, I was talking to one of this Credit Information Bureau, it's around 3,000 crore big industry. So what do we do now? This is a fix. And we need to really, work on that one. I'm not very sure that what shall we be doing at this point of time. If you have any insight, and when we are talking about this exclusion, possibly we can think, although I'm the part of this SRO and association, but we can think what Mukul was telling, this, our major challenge of these poor people is health and education. If we can also, apart from all these norms, what we are talking about from SRO, if we can add on this health and education up to certain level of loans, if we can provide them, possibly the loan sharks won't come into the system, possibly. And you are very right that, the recent report of this new origin, like 1 to 30 bucket has come down to 1.4%. That's a good sign. But my major question to you that what shall we be doing to bring all these people, all these entities in Credit Information Bureau? Because SICRA Act, we cannot do it. What's the way forward?
So I think it's only regulatory, right? Regulator has to, so that's the only way it works. From when I was in Equifax, we were trying to see how SHD data can come in. That's a very big part of the data. Correct.
Going on since 2014, the first notification we got in 2014, notification.
Yeah, banks can afford to automate. I think they have enough, funds available to automate this process. As you rightly said, I think a lot of banks have taken the initiative to, track SHG at the individual level.
One just point adding to what is it's about delinquent, how to tackle the delinquent customers and how to bring them back to the field. In fact, in individual insolvency, there's a concept called fresh start. So probably something like that we need to look at how somebody who has failed and the intention is good, and as you rightly said, the intention is good, but the ability they are not able to repay it back. How can you bring them back by giving an additional dose of funding? Fresh start.
Thanks, Maman, sir.
Sir, one just point, sir. With respect to what Saibal was asked, with this credit bureau data. So it's not only the SHG data, but what since we are talking and moving more towards technology, building data models and all. But what we are also observing, like MFI underwriting is very much standardized and going by very simple regulations that FOIR and income. But another pattern what we also see in the data that the data which is uploaded by the banks, especially in respect to, let's say, KCC, if we talk about gold loans and all. So even though the RBI has brought the data quality index, maybe in September, I think 2023, but still there is a lot of data discrepancies still happening. Means one problem is definitely what is rightly pointed out, uploading the data. But another problem is also there is a whole hell lot of discrepancy in the data. And then because we have to strike a balance, ultimately we have to retain the customer. There is a huge cost of operation in reaching out to the customer. Then we also have a legacy customer which is coming up for the third linkage, fourth linkage, fifth linkage, and then we have to, even though now since 60/40 has come, we may have to go for a different products, but ultimately the underwriting and the data quality which comes in the bureau is also seems to be not resolving. So any insights on that?
Yeah, 30 seconds to answer Nanai sir, because in the interest of time, but however you can catch up with Nanai sir over coffee.
What I can say in 30 seconds is I'm ex-managing director of Equifax, not the current managing director of Equifax. So I can't comment on that at this point. I'm actually on the other side. I'm on the board of Microfinance. So I would not be able to, but informally I can always give you my thoughts. Thank you.
So thank you, panelists, for wonderful insights and the understanding the crisis and also the way forward. Hopefully, the session is interesting for you all. Thank you.
Thank you, Raghu sir, for wonderful moderation of the session, and thank you, the panelists. As SRO, I can say that we took a lot of takeaways from this discussion. I would like to invite Mr. Vivek Tiwari to give some small mementos to our panelists. Requesting Vivek sir here, and Gigi sir, could you please join also? Now we will break for a small tea. Now we will break for tea, and we all will gather around 12 noon for our next session. The tea is served. Relationship is a key in microfinance, and one of the major crucial role of customer relationship is grievance redressal mechanism. So in this direction, Sa-Dhan has developed a manual on client grievance redressal mechanism. It has been developed by M2I consultant, Mr. Deepak Alok has written this on behalf of Sa-Dhan. I'll request Mr. Deepak Alok on the dais and give a small presentation on the manual.
So you'll need to pull up the slides. So this is a joint effort of Sa-Dhan and M2I. So while a lot of text has been written by us, but much of the tools and thought process was already existing within Sa-Dhan's ecosystem. So we have also taken advantage of that as well. So while we were discussing this manual, one important area of work which we needed to do. So the reason why we wanted to focus on this manual was in the past
2 to 3 years, the focus of the organization have kind of shifted to other seemingly important things like technology, audits, risks, and somehow we had a feeling that the client grievance redressal mechanism was getting neglected. So we have also seen what kind of issues were being discussed in board meetings and the senior management meetings. We felt that not adequate attention was getting paid to this very important issue. And the most significantly, while we were interacting with the customers, we increasingly got a feeling that the customers are losing trust in the CGRM mechanism of the MFIs. So they do not trust it. Even when they call the toll-free number, they no proper response from there. So a couple of times they call and then they said they no use calling this number. So essentially, in many organizations, what we have seen that the CGRM is not non-functional. And one related aspect is that there is a very strong focus of the recent RBI governor and the deputy governor on the importance of strengthening customer service and the grievance redressal mechanism. So in that context, we have developed this manual. So we had extensive discussion with Sa-Dhan's team. We looked at whatever existing materials were there, and then we tried to build upon that. How this manual is structured, so will be shared soon after this presentation. So we took the existing benchmarks as the standards. For example, we have RBI's directions, we have industry code of conduct. We also have some international benchmarks such as G20 benchmark, which specify that for financial services industry, what are the good practices with respect to a CGRM. We also looked at ISO standards. And we took that as a base and said that our grievance redressal mechanism for the MFI should comply to all of these. Then the second important component is a governance framework. So CGRM will not be effective unless we have put a strong and effective governance behind it. So what will be the role of the board of directors, what kind of reports they will look at, how independently this will be from the normal operations, how it will be reviewed, what will the role of audit, and things like that. We also gave extensive operational toolkits for the MFIs in case they want to adopt. We gave model policies, we have several tools, we have standard operating processes, we have a list of KPIs which the MFIs can straight away consider. We also have some training guidelines and some even the questionnaires, diagnostic questionnaires are also as part of this. And finally, we have one 4-level maturity assessment matrix. And this maturity assessment matrix was developed by Sa-Dhan in association with Smart Campaign. So this is also part of the CGRM manual. So we thought that we will have, we'll take advantage of already the work which was already being, was there. So possibly this was not disseminated as much as it would have been. So we thought that let's include this as part of this manual so that this gets mainstream. So this is a very beautiful framework, a 4-level maturity framework, which we have made part of the manual itself. So how the MFI should be using this manual? So this can be used by the MFIs which are starting afresh, want to take a fresh look at the their CGRM process, as well as the mature ones also who want to do a fresh assessment of their processes. So as a first step, you can go through that maturity matrix and do a self-assessment on the basis of that, on the basis of the indicators which have been done. Then you can have a look at the templates which have been given, the SOPs which have been given, the KPIs which have been given, and see whether to what extent you will be able to adapt that. Then next phase will be to roll it out and train the existing people within the grievance redressal teams as well as within the operations team then develop the dashboards and the reports which have been suggested as part of the manual, and you use that for tracking, reporting, and improvement. And we recommend that you carry out this process once every year, so that in case there are any findings, any lacuna, those things could be addressed. What is our wish list while we were developing this manual? So I guess we discussed, Gigi sir had guided us in what will the vision of this manual itself. So I sort of tried to translate that into some specific points. So what will be the wish list for the entire sector? So the first of all, there should be a board level ownership and regular review of the CGRM mechanism in all the organizations. So the board should take active interest in that. It should get the proper reports, and those reports should be regularly reviewed by the board. Similarly, a different set of reports will be there for the senior management. Then there has to be client-centric access and awareness. So that is one important thing which we feel is that missing at this level. So we need to focus on making this system so accessible that each and every member is aware of this and it feels confident of approaching this system. Then for the purpose of tracking the grievances, status of grievances, we have to use technology so that real-time dashboards are available with the relevant people, so that we are aware about which grievances are getting redressed, which ones are not getting redressed, what is TAT, who are the responsible people. Then we also have to make some efforts to train our staff members within the grievance redressal teams as well as the other staff members, so that they are comfortable and they're confident of resolving the grievances as and when they come. The grievance redressal mechanism also has to become a central part of the internal audit and risk management frameworks within the organization. So whether or not these are working, the internal audit should check. There should be thresholds and the benchmarks as part of the risk management frameworks as well, and those should be reviewed by the appropriate committees which are already in place with the internal audit and the risk management frameworks. And it should also be objective that majority of the grievances should be resolved at the level 1 itself, to the satisfaction of the customers. So possibly this is the desired state which we are looking at, which the industry should look at, and I believe that if we reach this level of states, we'll be in a good standing vis-a-vis the overall financial sector is concerned as far as CGRM is concerned. So with that, I end my presentation, and we'll have a panel discussion after this, and in case there are questions, I will take those questions during that. Thank you.
Thank you, Deepak, for the detailed presentation. Now I will invite Sa-Dhan board members on the dais to release the CGRM manual. I will like to invite Mr. Ajay Kapoor, Ms. Rupali Kalita, Mr. Mukul Jaiswal, Mr. Ganesh Chandra Modak, and Mr. Vivekanand Salimat. I'll also ask Deepak also to come in front. Yeah, thank you everyone. Now I'll invite the panelists for the next session. Our, before that, I will just like to say that this manual is available with us. If you want to take this, you can contact Mr. Ardhendu Nandi. He is Mr. Ardhendu Nandi, so if you need the manual, he will be the contact person. And yeah, now we will go for our next panel discussion. The topic of the panel discussion is client protection in microfinance, role of effective CGRM and emerging trends. For this panel, I would like to invite Mr. Jagdish Babu, CEO of Pragati FinServe. He is the moderator of this panel. Our eminent speakers for this panel are Mr. Vivekanand Shalimar, Chairman of IDF Financial Services, Mr. Suresha, Head Customer Experience, Ujjivan Small Finance Bank, Mr. Ramesh Periyaswamy, Chief Compliance Officer, Spandana Sfurti Microfinance, Ms. Khwahish Rawal, Chief Compliance Officer, Swaman Financial Services, and Mr. Deepak Alok from M2I Consultancy. Now I'm handing over this panel discussion to our moderator, Mr. Jagdish Babu.
Hello. Good morning, everyone. My name is Jagdish. I am the MD and CEO of Pragati FinServe, part of the Northern Group. We are a 4-year-old company. I think relevant to this topic, we have recently been gold certified in client protection principles by MFR. So something we're quite proud about. So I wish to welcome the wonderful panel we have here. I think all of them need no introduction, but just for the sake of clarity, we have the presenter Deepak Alok from M2I, resource expert. We have Kwashish from Swaman Financial Services, Chief Compliance Officer. We have Ramesh from Spandana, Chief Compliance Officer. We have Suresha from Ujjivan Financial Bank, Small Finance Bank, and we have, of course, our own Salimat sir from Chairman of IDF Financial Services. I don't think we can ask for a better panel, but we should have had the manual a day earlier. Our discussion would have been far more simpler and easier. Okay, but leaving aside, I think the previous panel talked about the crisis that we have been facing. It just made us think that why is it that we are so good in growth? We have been growing leaps and bounds from probably less than 10,000 crores to among the highest CAGR among all financial services the last 20 years to more than 4 lakh crores. But where sustainability is where we are facing repeated issues, right? So the crisis after crisis talks about what is it that we are missing in the growth story, right? We have made fantastic progress in terms of technology, assimilation of technology, functional capabilities, scaling up, employee training. So we have done wonderful progress in all these areas, but still again and again repeatedly we are being hit with issues, and something makes us think that maybe it's all to do with us being less customer centric. Maybe we could do more on that. Maybe we could responsible lending is one area which again has to be customer centric. So maybe that's one area. So from that perspective, I think today's panel discussion on effective CGRM implementation, roll forward, improvements and innovations is very, very relevant. So I will just I'll just start with my colleague Mr. Selmaji. I think from way of opening statement, I think CGRM is no more a functional aspect. It's more of a strategic imperative, given that recently even the RBI governor also has said either perform or perish. And I think there was a clear noting that the industry had more than 90 lakh complaints in the last 1 year, and 3 lakh complaints of 300,000 of these complaints also landed up at the RBI's doorstep. So there was a very clear statement from him a couple of months ago that this is not something that we are okay with, and we're going to come down very hard on this. So Selmaji, I will hand over to you. Please, why don't you would you like to talk about how we can the board ownership and the senior management, policy level decision making, what is it that we need to do to make client protection, CGRM, and the whole responsible lending a very core intrinsic part of our system, so that we don't face this crisis in the future?
Thank you, Umesh Babu. This grievance redressal mechanism and all has been almost since the inception of the microfinance. Every crisis has happened because of the backlash of the customer and also response of the ruling class or bureaucracy regarding what they perceive as the difficulty. It all started the first in Andhra even much before 2010, because the grievance at that point of time was when the microfinance came, it disrupted the self-help group movement, and also there were some cross-selling which the government and others perceived as unethical. So then crisis in Andhra, so Malaga committee at that point of time thought that something as a regulation has to be provided so that the customers are not aggrieved, and therefore we had these rules. So they prevailed for some time. Again the industry, all of us demanded that there is no level playing field, and therefore the current regulation is not conducive for the growth. We all demanded, and RBI obliged, and we have the crisis now. Well, what are the principles? Some of the principles are, if the grievances are there, some of them are communicated, some of them are not communicated. Like pricing and all, if they say your price is too high, then how do you respond to them? We will only say them rules. But these are in their minds. When there is an opportunity, it gets frustration, gets into agitation, and all of it will have the crisis. So addressing the possible apprehensions among the clients as to what are the concerns that they have. There may be genuine concern, but there may be genuine difficulty also. Like we said about the pricing. Pricing is one of the concerns. Everybody says it is too high, and all of us say it is not high because our own cost, and there are various justifications for what we do and all that. And also cross-selling, and this cross-selling, RBI time and again has been telling that it is all, whatever said and done, cross-selling is forced upon, it is not voluntary, it is never voluntary. Even when we deal with the banks, they cross-sell certain things. We don't have wherewithal. Like all of us give 10% cash margin. Are we collecting it from people? No. But RBI will not say anything about that. But without cash margin, can any one of us get loans from banks? No. So it gets percolates down. We say we are helpless, sir, we have to do. No, if you want to borrow, you have to borrow at this cost. This is how you cope with that. So it gets accumulated and expresses in these things, and all of us will start regretting, did we do things right or wrong? So in any case, these are all the industry level, macro level issues. If you look at the micro level issues, as a customer, we ourselves feel that if there is any deficiency of service by anybody, like we deal with banks, we deal with railways, several other service providers, if there is a small deficiency that we face, we get agitated. Even if I lose 1 rupee, 1 rupee is not much to me, but if somebody gives me less, I will crave for that 1 rupee. Why did you take 1 rupee more? So that is the psychology of people. If the customers have certain grievances, they get agitated, the responses will not be proportion to what the loss he may suffered. It will be much more. Say, supposing if the loss is 100 rupees, he may or she may stop giving back your 10,000 rupees loan. So therefore, it is very, very important that customer grievances are, one is perceived and addressed, and when reported also addressed. When reported, definitely 100% it should be addressed, but also we need to develop a mechanism through our field staff that what is in the mind of the people, what they are agitated at, what are the red lines the customer said. For example, in our own organization, I said, abusive language, if any one of them uses, I will simply sack, irrespective of the contribution, because it is my commitment. These are all people with respect, and no abusive language can be tolerated. So therefore, we need to look at what are the red lines, what we need to observe from the field. That is why in one of the earlier panelists was suggesting, you go and meet with your staff, find out what they're hesitating, what they're facing. Supposing if there is a backlash and if I put pressure on him, no, I can't give you incentive, others have been doing sell, other organization reporting higher repayment and you are not doing, that means it is your inefficiency that is causing this difficulty. It may not be realistic. So then when the staff get hesitated, they'll take their ire on the customer and backlash will happen. So most of these, even when the police try to arrest people, they will also have their own internal feedback as to which organization doing what. Many of the informally police, if you say, they will name some of these organizations that these are having these practices, sir. Legally, they may be correct, but the word in the field goes around saying who is coercive, who is unethical, who is unprofessional. So these also will be reflected in the behavior of the people. So therefore, the top management has to have an internal intelligence. It is not just passing a resolution. Every year, beginning of the year, you have to pass several resolutions like money laundering, this, everybody passes, yes, my duty is over. So that is not over, because when there is a difficulty and backlash and the kind of coping mechanism to manage that risk will be too high. So therefore, a board must develop a mechanism whereby regular feedback from the staff, when you go to the field, what are the minds of the people, how do they think, what others are doing. So this kind of intelligence mechanism, what has been enumerated, these are excellent. And also there are various issues related to when fraud happens, when other issues happen. It's a very good documentation has been done. If you can really implement it right and letter and spirit, it is going to be great. But apart from that, we should also get informal information. And board should, each meeting should try to find out what is happening, is everything all right, and some regular inspection, etc. If the top management involved and it is communicated to staff, the top management is very serious about these things, they can't tolerate these things, then also there will be a message. And also some of the incentive mechanism, punishment mechanism, reward mechanism also have to be re-looked so that the customer grievance also is given proper weightage. Then it may, in a way, alleviate many of the ills of not having a proper customer grievance. Thank you.
Selvaji, I'll just, thank you for that. I think what you're really saying is the cost of not meeting grievance could be quite high on the organization, and therefore it is top management imperative. I'll just ask one follow-up question to Selvaji. So, do you think, like we had this earlier rating system like COCA, and we had SPTF, and we had this, now we have series and organizations which are doing client protection ratings. Do you think we should develop a common rating or a benchmark across institutions so that the senior management or the board can sort of benchmark themselves on where they are? Would that be something that you think would be?
I do agree, but then also let us look at what has happened to the rating and the performance of each of the organizations. Have top rated organization not failed? So, rating it gives you only an yardstick, and there are also various pulls and pressure, as a result of which the rating may not truly reflect what the organization is doing. Otherwise, we should not have failed institutions in anywhere in the world.
That's a very relevant point.
Yeah, so it should be inward looking.
Thank you. So we'll move to Suresha, Head Customer Experience, G1 Small Finance Bank. Suresha, you have, your designation itself talks about customer experience, but I'm sure customer experience does not come without employee being the frontline employee being the one to deliver. So I would just like you to talk about coming to this CGRM framework. A very trained and empowered employee is very much essential to deliver client problems redressal. So can you please talk about that, and what are the typical problems that you have faced in this space? Some examples from what your experience would be very useful.
Thank you. Good afternoon, everyone. Let me start with congratulating Sa-Dhan and M2I for launching handbook on CGRM. I still remember after AP crisis, we worked with M2I, of course, Sa-Dhan and MFIN, MCRIL also. They have assisted us in developing CGRM. We were one of the first set of microfinance institutions that time to get certified under Smart Campaign for client protection principles, implementation of CPPs. And also we constantly undergone code of conduct assessment with M2I that largely helped us to prepare ourselves as we evolved as a small finance bank. I can submit that. Yeah. With that, on the employee readiness in terms of adopting CGRM principles at the ground level, there are three layers of challenges any organizations will face. One, anything before becoming a complaint, it becomes, first it is a query or a service request or a feedback. If that is not taken care properly, there are certain standards to deliver services. There are certain standards for transparently communicating to the customers to avoid mis-selling. So if those things are not taken care effectively, it becomes complaints. So before even preparing employees for handling complaints, they must know, they must be taught on how to avoid complaints in terms of ensuring effective services at the ground level itself. The second stage is, when complaint comes, despite a lot of communication and everything, you may end up facing challenges in ownership and follow-up until closure. The employees at the ground level, many times they may think complaint is a secondary activity. So I will focus on business, collections, complaints, okay, there is some department will look into it. The ownership is very important because it is again, as Salim sir said, it is not necessarily on the KPIs or ratings, all those things. It is about culture. So handling customer complaints is very critical for sustaining the business and sustaining customer relationship. If that understanding is not there, then there is an issue with the owning customer complaints and then effectively following up until closure. Whoever customer approaches, that person should be the owner, irrespective of whether you are handling that function or you are reason for that complaint. That is something for the bank or institutions to handle it. But primarily for customer, I am interacting with someone in the branch and that person should take care of it. I don't want to get into your various departments where to escalate all that. That is second thing. And third challenge normally we would face, the documentation part. Many times the field employees, they treat complaints, they handle complaints. Sometimes may not be effectively, sometimes may be effectively, but sometimes they fail to document it. It is very important to admit the complaint, document it in your system, track with the turnaround time that is prescribed for each type of complaint, and ensure there is an escalation. And you have adequate information captured in the complaint handling system, because complaints are not necessarily only for one particular customer that needs to be addressed and closed. The institutions needs to use that data for understanding the root causes. Are there any systemic issues at people level, process level, or systems level? So that data is very important, and bulk of the complaints, if it is coming from branches, effective documentation is also very, very important. So we face these challenges, primarily how to ensure the service issues, like you provide good service so that there are no complaints or there are very less complaints. So you take care of queries, service requests, deliverable requests, all those things very effectively, so it won't become complaint. Second one, if complaint comes, how to admit it, take the ownership, and also how effectively you document. I think to address these things, there should be a lot of practices at the ground level. Not only the manuals and all, there should be enough trainings. One-time training will not help. Most of the field staff will undergo trainings, but one-time trainings will not help. One is at the KPI level, definitely it is there. But when you slice and dice all your KPIs, you end up with having 2.5% or 5% weightage on the complaints and services. Because there are KPIs on business, collections, administration, compliance, audit, there are a variety of things. It is again, it should be on the cultural aspect. So training, few examples what we do. There is SQ Friday School, Service Quality Friday School program we run. Every Friday morning, one communication go to all branch managers with a case study. Any recent customer complaint that has arisen, what are the opportunities, how to resolve it, where field has failed, like some branch would have failed in handling that, what are the lessons and how to avoid it. So with that case study, every Friday, it goes to all branch managers and they are expected to explain the content of that training to the branch staff in the morning huddle every Friday. So that is an opportunity, 52 weeks in a year, 52 case studies. That's a huge opportunity for branches to inculcate, best practices for customer complaints handling. And in terms of ensuring, before issues becomes complaints, how do we reduce the complaints? So we have a program called Service Index. We measure everything. Most of the things where it can be measured through numbers, we measure. Like for every product, we have largely on the turnaround time and quality of forms, error rates, something like, if customer is choosing for making payments through NASH registration from other bank, there is a TAT for NASH registration. There is a TAT for how quickly you deliver the signed agreements to the customers, and how quickly you release the security collaterals after loan closure. So there is at least 12 parameters in the service index for every product. And those indexes are measured on monthly basis, and these are part of the KPIs for all staff, across field staff, supervisory layer, up to the MD and CEO of the bank. And board actively considers service index at bank level as one of the metrics for top management in their annual review. So this is one more thing helping us. And beyond the field level challenges, I would also like to touch base on the customer level challenges. We need to have adequate channels for customers to report complaints, maybe queries, requests, or complaints. Very convenient channels we should put, not just one helpline. At least there should be 2 layers of escalation matrix beyond your primary channels like helpline, branch manager, and email ID. Those are actually primary channels. Beyond that, if customers are not happy, there should be at least 2 layers of escalation matrix, and adequate communication and customer education should be done on this. It cannot be just on the website. It has to be displayed in the branches. It has to be communicated in our loan documentation. And in fact, we are the only bank to have 9 regional languages on IVR. So we support our customers through local languages. Customers can register for their desired language at first time when they are calling the helpline. And whenever they call next time, it gets transferred to the people who actually speak their language. 9 regional languages plus English. So that is very effectively handled. And also there will be certain situations like Karnataka, we had a situation a few months back where there is a media thing, coverage, and police involvement and government involvement, all that was there. So we identified, having one helpline pan-India, since we have operation everywhere, and we serve more the deposit side of the business also. For customers to reach out to the appropriate channel may be a challenge. Then we launched a temporary helpline for our Karnataka microfinance customers, where we communicated through our branches, through SMS. This is the dedicated helpline. If you face any challenges with regards to collections, mis-selling, or any recent issues, or if you have any questions on the recent media issues, what is coming up, you can call. And we trained the people to handle it, so that they don't have to do through IVR, though IVR Kannada is definitely available, but we established one dedicated helpline. So how proactively we act on the issues that is coming up. So that is also one of the major implementation we could consider.
No, wonderful. I think some of these wonderful ideas like this Friday case study is something which can be easily replicated by every organization. Very, very simple way of taking up, bringing focus back on the customer.
We get to know, but we don't disseminate it all across the organization. Yeah. So that is where we lack. And it's an opportunity. Every complaint is an opportunity. Let's communicate that to all branches so that they know, they learn from one branch. All branches will learn.
So I think another important point that Suresha made is on making a distinction between a query, feedback, and a complaint. Because a query or a feedback, if not resolved or acted upon, ends up turning into a complaint. And a very clear distinction. I think that's something which we all have to build it into our systems. So moving on, I will just I'll request Deepak Alok to come in. I think he's already made a wonderful presentation. So Deepak, the customer being the key part of this whole CGRM process, right? And we operate in a very low literacy, low resource environment, huge scope for mis-selling, huge scope for misrepresentation, huge scope for coercive practices. So how do we really empower or bring the customer back into the center so that he is aware and he has access to whatever? Everything organizations are building wonderful CGRM mechanisms like what you have seen with Jeevan and some of the others, I'm sure. But how does a customer get access to this? Can you elaborate on that? So how do we build systems keeping the customer around in the center.
Sure. So, Suresh already briefly touched upon this. So, when we build any system, we have to keep customers at the center. So, we have to keep the customers at the center, the language the customer speaks, the context in which she operates, and the kind of education she has. So, that should definitely be kept in mind. So, and CGRM efforts should happen right from the time when we originate the customers. When we do CGT, GRT, this has to be one of the primary communication items which should be there as part of initial onboarding process. And this has to be continuously reinforced that these are the channels through which you can complain. So as Suresh also mentioned that toll-free number cannot be the only channel we can have. We should have some alternate channels as well. Also, we also have to look at what kind of experiences the customer has when she calls on the toll-free number. So, is it convenient for her? Does she has to navigate through multiple menu items? Does it disconnect? Is it really toll-free or only some networks, on some networks it will work as toll-free? So those kind of issues needs to be constantly investigated and reported upon. So in this manual we have recommended couple of tools. One of the most important tools which we have recommended, which strongly believe, is that we should all have a mystery shopping exercises as far as CGRM is concerned, wherein the effectiveness should be tested on the basis of some dummy customers or some dummy calls being made to these numbers, and then seeing what kind of responses we are getting from our own system. Another thing which we have recommended is developing the KPIs specific to number one, awareness of the borrowers. How many people are aware about the KPI number? How many of them are able to successfully connect to these numbers? And then from which locations, which branches, which geographies, more complaints are coming and less complaints are coming. So more complaints is definitely an issue, but less complaint is also an issue. A less complaints might possibly tell that customer are not aware in that area, or people are not proactive, staff are not proactive in telling the whether the CGRM exists or not. So the KPI should be there. It should be monitored by the risk team, by the audit team, even by the grievance redressal team itself. So we'll have to take a holistic view, starting from customer education to continuous communication, to making sure that the systems which we have built are actually working through various tools and techniques.
Absolutely. In fact, my own experience, in my own organization, we were getting what we thought was limited number of grievance calls. So one of the first thing we did is look at the loan card. We made the location of where the grievance numbers are made prominent with a strong outer box, and the calls just doubled. Right. Conversely, if you want to reduce your number of complaints, I think you can just make it smaller font. Right. So I think it's all in the font.
Yes. Yeah.
Right. A lot of it is what you rightly said, the language and the font that you use, how you enable the access.
And one interesting thing I will tell you that in one of the organizations, I observed that the Sa-Dhan's toll-free number is written more prominently than the organizations itself, and I inquired Nandiji and said that yes, from that organization we are receiving more call. So it's all in the fonts, how prominent it is mentioned and where it is mentioned.
Very good. That's it. So I think we have discussed about the key stakeholders. We have talked about the board and senior management as a stakeholder. We have talked about the frontline employee and as a stakeholder. We have talked about the customer as a stakeholder. Let's move to Kaushish. Let's talk about the regulator and the self-regulatory organizations and the RBI as the stakeholder. What is their stake in this whole thing? What made the RBI governor give out such a strong statement? Is it really something that as a microfinance organization, is it really something? Of course, different organizations have different issues. From the perspective of a microfinance organization, would you like to elaborate on that?
Yeah. So RBI is very. This is one of the key pillars for them, when they look at an organization, customer grievances is something that has been inserted in the scale-based regulations also. So now in any balance sheet, you need to have a disclosure of how many customer complaints you've got, what are the timelines in which you have resolved, what are the pending complaints. It's a very critical aspect that they look at as an organization. They monitor the CMS portal as well. Any complaints which have come directly from the CP Grams portal has to be monitored from the organization perspective. There have been a couple of circulars. There has been a very recent circular which came on 3rd of June, which were marked to NBFCs with respect to customer grievance mechanisms, which are adopted. They want a monthly review mechanism by a company. They want a grievance redressal team to be there. They want the ED or a director of a senior capacity to be part of, as a chairman of that committee, which has to head that committee. And they want a root cause analysis. So the last thing they want is others as a category. So they want others to be defined in a more detailed manner, which they have explicitly instructed companies to follow. And that is something that a company has to look at from a growth perspective also. Obviously, if a grievance redressal mechanism is effective, the retention of the customer also comes in place. So there's a business angle also with respect to this.
So yeah, obviously the regulator is very much interested what we're dealing with the customer, and given the fact that this is almost the largest number of customer base that we handle, almost close to 8 crore customers that we handle, 8 crore households, and that to low literacy women borrowers. So obviously we can be very much sure that the regulator will be very keen on ensuring that our customers get a fair deal, they're treated properly, and there is no coercive practices used in any manner. So I think great that you brought out some of the, what I will come back to the follow-up question. Do you also think this whole CGRM network is somehow connected to the ESG framework?
Yes.
That's also a very recent development.
If we look at ESG as a whole, governance is one of the pillar, is the G of the ESG. So it is a administrative arm of ESG in which we need to ensure that there's fairness, transparency, the management is vigilant, and they want to ensure that there is a fair lending happening, no over-indebtedness. And the social impact. The S is mostly a social impact, which can be a strategic driver for any company to grow. So for any company, if they have a roadmap in picture, these few things can also have an additional adding to an impact that we can make in a society as a financial inclusion.
So if any of us are raising capital or debt in the future, you can be sure ESG rating and ESG compliance is, for most of the large lenders and most of the large investors, that's become a very critical thing. So somewhere CGRM ultimately goes back into our own organization development. So I'll just move to Ramesh, the last on the panelist. Ramesh is the Chief Compliance Officer of Spandana. Ramesh, I think, can you talk about the compliance officer's role first when it comes to the whole CGRM framework implementation? And also, what has been your experience in terms of how the complaints are handled or mishandled, or how the complaints are resolved, and how is it monitored? Does it go back? Is there an audit team that looks at how the complaints, how the CGRM team independently works? Can you please elaborate on how compliance as a role needs to be involved in this whole CGRM framework?
So earlier, now over a period of time, CGRM function assets has evolved much. And it is part of one of the strategic inputs team, where giving to the business or the risk team, and also the regulators as such. So now the compliance officer role is also part of the CGRM. Why? Because now internal ombudsman has been introduced over and above the grievance redressal officer and the principal nodal officer. So when we are being the persons who interact with the others, external stakeholders, which includes SROs, regulators, and also other people. So our role is to now, apart from internal audit, who verifies the CGRM functions, how effective it is. Now we are also started looking at CGRM as one of the key pillar and the team, where not only whether the internal processes and policies have been followed, which has been reviewed by the internal audit team, but we have started looking at how effective it is. whether they are grievances or how effective, whether that's really a resolving or just a completing the TAT. So that is one of the key part for our regular periodic compliance testing. So that is also one of the important one, and we have also included that as a KPI KRAs for the team, not only the CGRM team, and also for part of the senior management. So our compliance role is moved beyond the as a compliance and also the effectiveness.
So I think what you're saying is, again, if I were to summarize, that the TAT is as important as the resolution of the complaint. I think very rightly so, and that is built into the KPIs of the organization. And you also have created roles like internal ombudsman, which is again, I presume, is directed by the RBI. That is a good practice. Is it applicable to all institutions, or is there a size limit?
No, it is a size limit.
Size.
So it has a size limit, not for the smaller companies, but the middle layers.
At what size would the mid layer and above?
It is a 5,000 crore.
So okay, so then
that really actually it is originally it started with compliance tick boxes, but the role of internal ombudsman also now recently evolved. So internal ombudsman not only checking the rejected compliance, but also they are seeing the performance and effectiveness of the compliance which are getting resolved. So that is being separately reported to the senior management. We have a separate discussions, and also it goes to the suggestions from the internal ombudsman to the board. So that one of the key points for the board to take a strategic decisions. So that is important, become one of the important requirement.
I was just, I think on the internal ombudsman going forward a little bit, there was some RBI report committee which looked at the internal ombudsman program and said that I think the recommendation was internal ombudsman should not be paid by the organization, but should be funded externally by the regulator or a SRO or some process like that was what was described. Do you think, is it really required, or do you think that that's something
that is, I don't think that is really required, because it's like a normally we take the people from the matured general manager level from the banks, retired persons. So they have enough experience of handling this, and I don't think that those people are look at any money as such for this particular role, but it is majorly a kind of a support for their own financial service industry.
Suresh, you wanted to add to this?
I just want to add, I think this has come to us as a feedback, RBI sought feedback from most of the institutions, financial institutions. So we sent our feedback. So it is totally an independent role. Internal ombudsman is totally an independent role, and there are enough controlling guidelines, like it has to be for single term, you cannot extend it, and it has to be approved by the board for selection of the internal ombudsman, and the decision of the internal ombudsman is final. And if you have to reject internal ombudsman decision, it has to be rejected by MD's approval, and you have to disclose it in annual report. So there are enough guidelines already covered. So we recommended, it should continue as it is now. Like saying, internal ombudsman should not be paid by the organization. It's like you should not be paying your statutory editors. As good as that, yeah, right.
No, I think quite relevant. So. Good point. I think this can also, a smaller, simpler version of the internal ombudsman program can be implemented by any organization. It doesn't have to be a 5,000 crore organization.
Correct.
The principles apply.
Principles
you
apply.
have an independent person who takes a decision.
So instead of grievance redressal officer or the PNO's decisions, it can be an independent person who look at it from the customer point of view and also the business sustainability point of view. So that will be a good suggestions which comes from the third party, which is an independent person.
I think very, very relevant. I think from a monitoring perspective and a impartiality perspective, roles that need to be created, independence that needs to be given, and and there is self-control that needs to be applied by all organizations when it comes to agreements. I think that's something very relevant. So I think we have finished one round. So I will just ask some very specific questions. I think, do we have time? Yeah, I think we have another 15 minutes time. So I will just ask one specific question to each of you, and I would just request you to share practical examples, like some of the things like the Friday school that you have shared about customer grievance. I will request all of you to talk about specific challenges, for examples, in a couple of minutes. Selmaji, can you talk about any challenge that you have faced when the policy level discussions are being done?
So far we have not faced any challenges, because in the culture itself we have built in, if there is any grievance, it is the top priority. So people have been trained to do that. Even when we see Acme, since inception, there is an ombudsman, much before Sa-Dhan. I keep on asking them, what are the queries that you get? There are only two queries, sir. One is when the loan is going to be given, the TAT of loan and quantum of loan. Except these two, there has not been any serious issue regarding the customer grievances. That's why I told, these are felt. Unfelt may be there in their minds. So how to probe and get it is our call.
Koshish, I'll ask you next question. For a smaller MFI or a newer MFI, would you recommend, have you come across any specific technologies or processes which could help us implement on a very rapid scale effectively the CGRM process?
So we can obviously leverage technology here, but for MFIs, obviously human touch is something that is there. We can't just evade that point. But in terms of technology, we can have an integration in the loan MIS or the integrated system where we can have digitally tracking system to ensure that the customer complaints, whichever have been received by us, are tracked. What is the TAT? Where is it getting? If there are any issues, what are the issues? So we can have more of a human touch plus a digital technology leverage we can use to have an integration of this kind of a register which we can maintain internally as a company, as org level, where we can obviously share it with the board for root cause analysis if there are any instances which need to be highlighted to the board. Apart from that, obviously WhatsApp is there, but again, there has to be an integration with the fintech player to go to that level. But again, as a MFI, it's a growing sector. It is something that we can obviously look at a futuristic perspective to, yes, to have an integration of that sort so that this is managed in a more uniform manner, because there's, again, a lot of movement in the sector in terms of FOS. Whoever has a physical touch with the customer, that person is not constant. That is the main challenge that everybody has faced. So that is something we can think of.
Thank you for that. Ramesh, I think you run a MFI, part of MFI with more than 1,000 branches. So do you think there is a case for standardizing the way complaints are classified and identified? Because there is also scope for organizations to innovatively classify a complaint as a query or a feedback as a feedback, etc., and to improve their own CGRM scoring, etc. Because everyone ultimately have KPIs on this. And so, do you have any suggestions that is there a need for a standardized industry level classification?
So I would, because every organization has its own practices and processes to segregate the grievances or the complaints or even the feedback as a query or whatever. So I would, even I feel if it can some guidance, it's not kind of, it can't be given as a dictative manner, but it can be such a guidance can be given in a broader side. So what would be the standard name which we can segregate as such a particular grievance as this or the feedbacks or the queries? So that will be helpful.
Thank you. I think 10 years back, 8-10 years back, Suresha, this question is to you. 8-10 years back, the majority of the complaints were about my credit bureau has been wrongly reported, right? Followed by my loan has been refused, maybe, and third-party product complaints, or sometimes commissions or etc. This were the major contributions. Is there any quantitative change in the type of complaints in the last 7-8 years? I mean, are we seeing the same type of complaints, or is there a difference in the mix of complaints? Any feedback on that?
There is not very significant change. Of course, you will have complaints, similar complaints coming irrespective of the time period. That is on the staff collection practices, for example, and loan rejection queries and all. The bureau-related queries will come. It is not necessarily a deficiency on the part of the institution. It is accurately reported, but customers will dispute. It is more of clarifying to the customer, explaining it. It is not necessarily an issue with the report itself. Very rarely, like 1 or 2%, there will be some mismatch. Of course, we have to take it up with the bureaus. Otherwise, 98% is actually, it is true reports, but customer is not willing to accept it. So in our case, I think the complaints on bureau reports and all is very less. Of course, on the collections and if there is any commissions paid, those things will come. Those things are taken care, and especially since we are now secured lending is also there. Insurance claim settlements, of course, comes.
Issue earlier.
Claims
Nowadays, I don't see that as a big issue.
So it used to be a major issue. It is largely because of the processes that we set out now and the SLAs we have with the insurance companies. And there are dedicated teams within the organization to handle insurance process. So that is how it is taken care. And since we have secured loans also, there are certain new types of complaints which we get, like, they want to do a balance transfer, and or people try to retain them by giving some better offer, and then they complain, I don't want to hear, I want to move out, like that. So those complaints also we are seeing. But as far as micro lending is concerned, there is not a significant change.
So I think the positive side of it is definitely industry has corrected some of its issues by way of a process. I think insurance was a very big issue 7-8 years back. Now I don't see, I think that's almost all organizations have resolved their systems. I'm sure the other areas also we can, if we can solve one type of problem, we can solve the other type of problems as well.
That comes with the scale, There is a lot of automation is done because of the scale.
Yes. Yeah. Probably even in credit bureau, need a lot of automation, the reporting as well, timing, etc. So I think I'll come last to Deepak Alok. Deepak, you made this wonderful report, guidelines on how we can implement. So can you, for the benefit of all of us here, lay out a brief roadmap on how someone who is not really beyond a basic call center and accepting grievances and trying to resolve, can you, in a simplified manner, tell us, for a mid-size or a small-size organization, what would be the simplest and easiest way to reach 80-90% of the effectiveness here? What are the first priorities that you think we should address?
I guess the first and the most important priority should be to educate the customer that a system like this exists in our organization. Because getting a toll-free number is very easy. Printing it on a passbook is also very easy. But then communicating this to the customer and then ensuring that this works is very difficult. So you have to focus on that whatever number, whatever mechanism which we have said that we have set up actually works for the customers. And then educate the customers that this is the system and this is how it is supposed to work. And then put a proper monitoring mechanism using somebody pretty senior in the organization and ensure that this the processes which we have set actually works. The customer, if they are able to call, the call connects, it goes to the correct people, correct set of people are able to record it, their grievances are resolved to the satisfaction of the customer by an independent verification process, not by the person who against whom the complaint had come, by an independent person. So a small and medium organization just need to keep these basics right, and as the scales increases, the culture sets in that the grievance mechanism is there. This needs to be communicated to the customers. It needs to work. It needs to be resolved, and this appropriate KPIs need to be monitored on a regular basis. So whether it is a small organization, mid organization, or a large organization, the processes, the fundamentals remain the same. Yeah.
So what really you're saying is the culture of the organization needs to be customer friendly, and the employees have to be trained on the basic processes and implemented. Wonderful. I think this manual will also help sure. Organizations look at some of this and come back on this.
And lots of KPIs have been outlined here. So those KPIs you can go through. Lots of tools and techniques for root cause analysis, for mystery shopping exercise, for internal audit, and other tools have been also mentioned in this manual. So these will definitely help you in building a responsive customer grievance redressal systems.
Thank you all. I think if I'm to summarize before I take questions, I think broadly, I think significant progress has been made by the industry in terms of product design, transparency, building trust, reasonable pricing, all of it, again implemented through the key fact statements, etc. A lot of progress has been made in terms of ensuring going forward with the guardrails, etc. Fair treatment and over-indebtedness does not happen. But I think going forward, CGRM is an area where I think some of the organizations have made significant progress, but something which acts like a feedback loop and which not only ensures that this will allow our clients to raise their concerns. An effective CGRM should have three objectives. One, it should allow the clients to raise their concerns, because that's the most effective way of preventing a blown out crisis later. It should give institutions, which is us, a insight into what are the systemic issues that are happening. If I'm analyzing that particular type of issue, complaints are going up, then I take a proactive loop and I correct those issues rather than wait for things to become issue. And the broader ecosystem, whether it's SROs or the regulators, will have a pulse on what is happening if there is a standardized CGRM system, so that issues can be addressed at a sectoral level, not just at an institutional level. With that, I think the panel, I thank the panel for their contributions, and I will just, we have a few minutes time, then I'll request the panel, if anyone, if the audience wants to have any specific questions other than observations, so please, please do raise them now. Yeah, someone at the back. Please also mention who you want the question addressed to.
Good afternoon, everyone. My name is Ujjwala. I am CEO of Annapurna Mahila Cooperative Credit Society. मेरा कोई क्वेश्चन नहीं है, सिर्फ मैं कुछ शेयर करना चाहती हूँ. 22 साल से मैं इस ऑर्गेनाइजेशन में काम कर रही हूँ, अन्नपूर्णा. क्लाइंट एजुकेशन इज़ वेरी वेरी इंपॉर्टेंट, बिकॉज ग्रीवेंस तभी आता है जब क्लाइंट को कुछ इन्फॉर्मेशन नहीं मिलती है, क्रेडिट ब्यूरो की हो या इंश्योरेंस की हो. हम अन्नपूर्णा का खुद का इंश्योरेंस है. थर्ड पार्टी इंश्योरेंस में ये प्रॉब्लम होता है कि थर्ड पार्टी के ऊपर डिपेंड रहता है कि वो इंश्योरेंस सेटल करना है, कितने % से सेटल करना है, कितने रुपीज़ देने हैं, कब देने हैं, इतने XYZ कंडीशंस. अन्नपूर्णा का खुद का इंश्योरेंस है, हेल्थ इंश्योरेंस, लाइफ इंश्योरेंस एंड ऑल. सो ये जब सेटल करते हैं हम इन हाउस, तो इस इन हाउस सेटलमेंट के, जबकि ये IRDA का रेगुलेटेड नहीं है लेकिन IRDA रिकमेंडेड है. I am happy to announce that Annapurna is now going to register a pan India insurance company. It's in pipeline. But इस वजह से हमारा खुद का इन हाउस इंश्योरेंस होने के वजह से और क्लाइंट एजुकेशन, हर एक चीज़ जो भी है वो क्लाइंट को देनी है, वो रिटर्न में उनके पास होनी चाहिए. इफ़ दे आर अंडरस्टैंड, देन दे आर नॉट हैव एनी क्वेश्चन और डाउट. सो आई एम हैप्पी दैट वी हैव ओनली 1 or 2 grievance and 1 or 2 verification calls for regarding this, and we are a medium size organization, and
thank you.
Thank you, sir.
Thanks for your observation.
Thank you.
Yeah, I'll take it as observation, not a question, so I'll just not pass it on to any panel members. Yeah. Anybody else would like to ask any questions? I think we have Deepak here, we have very experienced compliance officers. Please do make use of the time. I'm sure lunch is not yet ready. Yeah? So, yeah.
I think, most of the, audible? See, most of our customer segments, they are not very comfortable to directly approach an helpline or somebody sitting in headquarters like Bangalore, Mumbai, Hyderabad. Most of the times you get complaints, like surrogated complaints, through branch staff. So empowering branch staff is very critical. I think we have implemented a program called Customer Care Representative in every branch. I think it was in 2009. So that helped a lot. So customers know whom to approach at the branch beyond their regular relationship officers. So they can meet. Maybe as a joint responsibility, if not fully, we give it as a full-time responsibility. That helped a lot in addressing customer concerns because they would like to approach branch. Only in rarest cases they go beyond the branch. And most of the times the complaints reported at branch will not be recognized or admitted. So having a dedicated role at the branches if possible, if not fully dedicated, at least partially, and you can actually display that as saying, customer care desk or welcome desk, help desk, whatever, that will largely help.
Any other observations?
I have, I guess, one observation from my side and suggestion for the senior management. In case you see that no complaints are coming, you should not become very happy. In case no complaints are coming, that means that your complaint management system is not working. It's not possible for an organization with 1 million customers to have no complaints. So we have to take that as a pinch of salt. So I will give you an example that we are doing audit of one of the largest MFIs in the country, having more than 2 million customers. And when we looked at the grievance data reported to the board, it has only six grievances in a quarter for 2 million customers. So, so I can safely conclude that the grievance management system is not working in this organization.
Stopping the feedback loop as well.
Yeah.
It's not a question, but just an observation. See, if we are talking about microfinance and if all the customers are women, it is always advisable that if there is a woman employee at the branch, because most of the women do not feel, they get intimidated speaking to a man. And, because there is also a fear that the next loan might not come in. So I think it is always advisable to have a woman employee at every branch of ours, because if you're dealing with all women as a customer, and that way inclusivity also, diversity will increase, and then it also helps the woman customer to open up.
Very good point. In fact, incidentally, in my organization, all the CGRM employees are women by choice.
This is very critical actually, having women representatives, staff at the branch. In fact, the customer care representative, when I said, predominantly that role is prescribed for women employees. And our founder, Mr. Ghosh, you all may know, he made sure that no branches will be opened if 1/3 of the branch staff are not women. Yeah.
Sir, supporting that, recently we had to go around districts during the crisis. This is one of the main observations. All of the district authorities were observing and requesting us to place women employees in the branches. It's very relevant. And one more thing, not an observation, not a question. Information is that out of we from ACME we have a toll-free number. Recently, for the last 2 months or so, out of 10 complaints, it is only request for loans. They are not getting loans. This is the complaint.
Now, currently.
Yes.
Escalation only at that level. All other things they will try to solve it at the process.
Nanti, can you just demonstrate the... Sa-Dhan is now launching a toll-free number, which is more on a IVRS call. So we'll just demonstrate that, and you can also give some suggestion if there are anything to be improved upon.
आप किस भाषा में बात करना पसंद करेंगे? Which language would you prefer to speak in?
ठीक है सर. Hello.
Hindi.
Call.
नमस्ते. साधन में आपका स्वागत है. आप किस भाषा में बात करना पसंद करेंगे? Which language would you prefer to speak in?
हिंदी.
कृपया जानकारी देने के लिए अपने जवाब बोलकर दें. यह कॉल रिकॉर्ड की जा रही है. कृपया उस ग्राहक का पूरा नाम बताएं जिसने लोन लिया है.
उमा देवी.
शुक्रिया. कृपया स्पष्ट रूप से बताएं, क्या आप खुद लोन लेने वाले हैं या किसी और की तरफ से बात कर रहे हैं? कृपया अपना कस्टमर आईडी या लोन अकाउंट नंबर बताएं. यह नंबर आपके लोन डॉक्यूमेंट्स पर लिखा होता है. आप किस जगह से कॉल कर रहे हैं? कृपया पहले अपना राज्य बताएं. शुक्रिया. अब कृपया अपना शहर बताएं. आपने किस संस्था से लोन लिया है? कृपया उस संस्था का नाम बताएं जो आपकी पासबुक के ऊपर लिखा हुआ है. कृपया अपनी शिकायत बताएं।
That's, yeah. It's good one. So what they will do is that it will be recorded and then data will be passed on to Sa-Dhan at the end of the day. And after seeing that, you can decide wherever there are certain things to be escalated, we can escalate it to the concerned MFI. Yeah, yeah.
So is there an option to speak to some officer or it is
No. This is only recording of the grievance, and once the grievance is recorded, that will be transferred to Sa-Dhan at the end of the day, and then from there we will be able to escalate it further.
Efforts are there, but improvement constantly we have to do, because even for our own case, a lot of WhatsApp, everything comes in. Somewhere they use AI. AI will not recognize many of the.
No, of course, this is an additional thing, because after.
No. The effort is good, extremely good, and we should continue, but improvements have to be constant.
Yeah, thank you.
Based on the experiences, feedback and all that, we need to look at it. Many times, as a customer, when I put a query in WhatsApp, I don't get it resolved, because the algorithm wants certain keyword. If I don't use the keyword, it won't recognize. So that way, it has to evolve. Over a period of time, it will happen. And at least technology will take us to this level. Without this, I don't think we would have done anything like that.
And this we will be having it in 12 languages? 10 languages. 10 languages.
Yeah.
So thank you, fellow panelists, for your wonderful inputs. I also thank Team Sa-Dhan for the opportunity for this panel to deliver this, and thank you, G sir, for inviting all of us here. Thank you very much.
Thank you, Jagdish sir, and thank you, the panelists, for this insightful discussion. I would like to invite Mr. Ajay Kapoor to give a appreciation memento to our members. To Mr. Deepak Alok. To Ms. Kwahish Rawal. To Mr. Jagdish Babu. To Mr. Ramesh Pariyaswamy. To Mr. Suresha. To Mr. Vivekanand Salivan. I'll request sir and everyone else to come in front. We'll have a photograph.
A couple of announcements to be made. One is that CGRM manual which we have developed, as it was mentioned earlier itself, each organization can collect one copy from Nandi. That is number one. Number two is that we have made a request to all the microfinance institutions to share some of your stories, success stories on the developmental activities you undertake, like maybe CSR-based activities or some other developmental activities you take. We are trying to bring out a publication on the various developmental activities initiated by microfinance institutions in the past few years. Number three is that as part of the SRO, we have been collecting data from all the microfinance institutions. So far, we had been doing it in an Excel sheet. we have digitized that, we have made it into a digital format, and that software has been already shared. So kindly ensure that your team who is responsible for that does that data, submitted to us in that digital form. Of course. Nandi, anything else? Okay, thank you. Okay,
Thank you, Gigi sir. Now I will invite Mr. Somesh Deol, our Deputy Director, to provide a summing up.
Good afternoon, everybody. So I don't want to spend too much time away from your lunch. And I think a lot of summing up has been done wonderfully by our moderators. So firstly, I'd like to start by thanking Mr. Jagdish Babu, who did such a fantastic job. As always, sir, you taped our session so well. And also Mr. Harish Raghu for the session before this. And all our speakers in the last session. Let me start with Mr. Salimat, Mr. Suresha, Mr. Ramesh Perisami, and Mr. Raval. And also the speakers before, Mr. Raman, Mr. Nanaya, Mr. Murthy, and Mukul sir, if he's still here. As you know, GRM is a very important function for us as an SRO. The RBI in our regular functions every quarter actually expects us to be reporting grievances of all our member institutions, not just what we receive. Now you just demonstrated what we are going to be getting on this call, but we also what all the members, all about 75 NBFC, MFI members and all the NGO members also, their grievances by type of grievances and the time taken for the resolutions. And in case there's any kind of seriousness, RBI actually inquires from us as to how we are following up with our members and what their real issue is and to investigate further. So it's a very important function for them. And at the time when we were given this SRO role, they said that we don't know much about this sector at all. We know a lot about urban clients, we know about credit cards, we know about auto loans, retail loans, but we don't know about microfinance, we don't know about rural clients at all. So please help us to strengthen this function. And that's why we came up with the 4-level framework that Deepak was mentioning right at the very beginning, which was very aspirational. We wanted the smaller MFIs to come up to strengthen their systems. We had once come up with an IVRS framework where we were because we realized that IVRS was a bit consumer friendly, and we found that a lot of the clients were sort of opening up and sharing many of the feedback. In fact, we also received a lot of positive feedback. It was not only negative feedback. And we use this as a two-way channel. So we got their feedback, and we were also able to give a lot of information about products, about code of conduct. So we, I think, developed about 40 stories, audio stories, 90-minute captions. So we use that quite to our advantage and for the sector. And of course, we've been over the years as an SRO also, putting a lot of ideas, helping the RBI to strengthen the ombudsman scheme going forward. So I think just to, I think sum up, we already know, but I think some of the things which came up at the beginning of this today was, I know that people was talking initially that it was a scary situation to be in, but I think that by the end of the session, I think the feeling was one of optimism, and I think that the way it is that from every crisis we learn something. So I think that's what it is, what's going to come out of it. I think a few things to be little mindful about is I think some of the points which came up was to essentially focus on maybe the type of loans. I think the guardrails may be too broad-based, as some of you mentioned. So maybe to look at some areas to see whether we could focus more on carrying on the kind of loans, not to stop anything, but maybe more towards income generation kind of loans and to do that. And also to see that the qualifying asset that actually we as an SRO were also pushing to help the industry to move it down to 60%, that it should not be wrongly utilized and that it doesn't lead to any kind of excesses. I think we got some good feedback on the kind of innovation that we can go forward, and there were some great ideas which came forward, and we want to share all this with the RBI and other stakeholders. And I think on GRM also, I think on the second session, I think there was a lot on a kind of more holistic 360-degree view of how GRM should be taken and not just kept to only one segment. So how top management KPIs can be built in, how, a lot on sustainability, resolution, training, escalation, how I think the last suggestion of having women employees handling the GRM in the branches, mystery shopping. So I think many of these ideas we will probably be helping to document and to share it in the sector as a best practice. So thank you once again to all of you for coming here, for participating so nicely. As we've seen in many of these, I think we look at the success of our event from the participation, because this hall is totally full, so we had to get more chairs at the back. And secondly, from the pin drop silence. I mean, this has been so active. I mean, everyone was totally sort of listening in. So, and I think the quality of the speakers was so good. So thank you for coming to and making this a great success. And we look forward to many more. Thanks a lot. And lunch is on this side, as you know, is just one level below. And tomorrow is the AGM. So Gigi, so would like to say anything?
No. I just wanted to say that early. Tomorrow AGM, please be there. Every organization should be participated by the persons representing that. Number one. Number two is that today afternoon we have a Sankalp 2 for the non-profit organization, not-for-profit organization, that is trust societies, Section 8 companies and all. If anybody sitting here is also part of that, please do join us around 3 o'clock. Is it 3? 3, isn't it? 2? No, 2 or 3? Okay. At this venue only, please come back, then have your lunch and come back.